know your place, I'm top 10. Hello, today we are in Germany and we brought our valued MIBs and some of our staff to Germany. Here, our main purpose is to see the Championship League finals where I believe everyone gonna enjoy the game. On top of that, we are here to see beautiful mountains, to go to Zugspitze, to the Toboggan, really nice things waiting for us and we are really excited.
Welcome back to our German trip. We are amidst very beautiful creatures on ground right now before we make our way up there for our paragliding adventure. Can't wait to look at the view from up there.
Es una experiencia muy buena ya que uno puede aprender más sobre el tema de trader, ya con muchas ganas de aprender todo sobre velotax y manejar la plataforma.
We just got awarded the best partnership program in Latin America. We analyzed a lot of partners, a lot of MIBs that telling us the same, that our partnership program is truly the best.
Yeah, it was a great gameplay. Although I lost, but I really had a fun in that. Thanks for inviting me for the game.
The winner is Velotax.
Thank you everyone for your trust with us and we'll keep working to make sure that you always stay with the most innovative broker.
Welcome to Smart Vision South Africa. We as Velotax are so honored to be among the global traders and other leading brokers in the industry. So we as Velotax are so honored to be welcomed by you, our partners, our traders, and Smart Vision South Africa. We are looking to empower and grow the whole trading community with Valitex.
معكم محمد حمادي في مؤتمر أحد المؤتمرات الموجودة في البحرين برعاية سمارت فيجن. في هذا المؤتمر أنا كشخصيا محمد خلينا شلون أنا أعرف وأتعلم وأوعى أكثر بحيث أن أنا أكون في الطريق السليم في هذا المجال. وجودنا شكرا سمارت فيجن اللي خلتنا احنا نقدر نحضر هذا المؤتمر الرائع وخلتني أنا ودعتني شخصيا مع باليتكس عشان أكون أنا أحد رواد هذا البتاع من عافية.
Nobody can stop you to become a trader.
Good afternoon, welcome.
Hello, today we are in day 2 exploring Indian Ocean.
We had an amazing time. We're off to our water adventure.
Great!
Oh.
We got flip chart in the middle of the sea. Alright, second phase of the day! Hey guys, welcome to day 3 of our Holly's adventure. Was a phase early start today. We went fishing. We caught so much of fish and had them for lunch. And now we're on our way out to look for dolphins.
So thank you very much for being with us. Let's keep working together and get the new heights.
at the Valtex booth, and it is an awesome experience meeting the entire team here. They have been very friendly to make me understand about the concepts and about the entire thing about affiliate marketing. And I'm really glad that I came here. Thank you so much, Valtex. Thank you.
I just know that things are gonna end bad when my body only moves for the beat. You've been waiting for me. I'll just keep dropping it like there's no stopping it. Then walk with it. La 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 la. I'll just keep dropping it like there's no stopping it. Then walk with it. La 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 la.
2025 was not just a year. It was growth. It was a global statement. From international expos to regional summits, we showed up, stood out, and delivered. Across cities, across borders. We earned recognition through consistency, innovation, and an unwavering commitment to excellence. Beyond awards, education defines why we lead. Expert voices shared globally. We turn insight into confidence and learning into stronger communities. Together, we built more than visibility. We built long-term value with our partners and our clients, strengthening networks, expanding reach, and opening new opportunities. Through meaningful campaigns and global initiatives, we gave back with purpose, recognizing every step, every milestone, and every journey taken with Valitax. Because sustainable growth is built together. We close the year in celebration, honoring the journey, the people, and the wins. As 2025 fades, we look ahead, stronger, bolder, and ready. 2026 is coming. More innovation, more impact, more to achieve with Valitax.
And that type of pattern is the big concern.
Here's why phantom debt is looming over U.S. consumers and the economy.
It was first called phantom debt in this Wells Fargo report that called attention to the fact that there is no hard measure of how many buy now pay later loans are out there, how consumers are doing with these loans, whether they're really keeping up with their payments or falling behind.
Not having a clear read of underlying debt burdens in general, particularly for the household sector, can be a concern because you could be assessing the health of the household sector and looking at debt to income ratios, net worth being higher across the income spectrum, income growth, all of these variables that suggest that the household sector and consumer in general are actually doing fairly well despite elevated inflation and challenges in the broader economy. But if you're missing a piece of that puzzle, right, if you're looking at all of household debt and thinking it's all household debt, but there's this other component that's lurking in the background of this phantom debt buy now pay later segment, I think you could be missing or misrepresenting how healthy the consumer is.
The most recent information comes from data disclosed at the discretion of individual buy now pay later companies, as well as various privately conducted consumer surveys. This lack of centralized data has made it difficult to reach a consensus about exactly how much high-risk debt is out there.
Since buy now pay later loans are not currently reported to the major credit reporting agencies, it's a challenge for lenders to know how many loans a consumer has outstanding and how well they're doing paying back those loans.
According to Afterpay, one of the major 5 buy now pay later companies, 98% of their purchases did not incur a late fee as of the fourth quarter of 2023. The Financial Technology Association is a trade group that represents 4 of the largest buy now pay later providers: Klarna, Afterpay, Zip, and PayPal.
I do think the concern over phantom debt is overblown. When you look at the industry, even under Wells Fargo's own report, in which they estimate the buy now, pay later industry to be around $45 billion, less than 2% are in default, or what we would say not making their payment. 2% of 45 billion is less than 1 billion. Compared that to over 1 trillion worth of credit card debt. And so I think we need to put it in perspective.
But a 2024 survey by Harris Poll on behalf of Bloomberg found that 43% of consumers who owe money to buy now pay later services said they were behind on payments. Consumer Reports also conducts surveys on the issue.
We found in one of our surveys that the top reason for using buy now pay later was to purchase something that the consumer couldn't otherwise afford. So it's clear that buy now pay later, it can lead to consumers making purchases that they can't repay and then running behind on payments, which then triggers late fees and also just leads to greater accumulation of debt.
Buy now pay later is similar to layaway programs that became popular during the Great Depression. Retailers were aware of how little cash Americans had, so they created pay structures where the consumer would give a down payment to a retailer in order to pick up an item and then make payments in installments. Layaway began to decline in popularity in the 1980s and 90s when credit cards became more widely available. Buy now pay later doesn't seem to be going in that direction. Juniper Research estimates that these transactions could reach almost $700 billion by 2028. The Wells Fargo report concluded that the buy now pay later market may be small now, but we don't know how fast it's growing. It logically follows that we simply cannot know when it will be a problem.
Just some sort of nationally measured data would be so helpful just to understand really just how big of a burden this is for households. One of the challenges with this source of borrowing is just how unregulated it is. So to my knowledge, there's not many questions that are actually asked before you're offered a buy now, pay later option when you go to check out.
Buy now, pay later companies generally don't report information to the major credit bureaus, which means these loans typically aren't reflected in people's credit scores.
If someone falls delinquent on one of these loans, it will show up in a bank.
This technology is manifested in software. It lives on the internet. It still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US, Will it be China? Will it be Europe?
It's going to be the US. I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
What could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, you know, it's talent that drives, you know, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, you know, it's still really important to be physically proximate to other people who, you know, are working with you in the office. I mean, you know, I think that that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, you know, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? The China restricted galenium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. You know, we're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, like, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where, you know, some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in, you know, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner. Thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wong, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleiman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain. And they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's
That's
not
right.
the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI that China is leading in the AI of censorship. It is leading in the AI of facial recognition, that right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now, China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump and Xi Jinping set to wrap up a summit that's delivered little in the way of tangible deals, with China's leader warning that Taiwan is the issue that could trigger dangerous clashes. China now calling for an urgent reopening of the Strait of Hormuz as Trump says Washington can live without access to the waterway. And raising the stakes for Starmer, the Manchester mayor now seeking to join the race to challenge the UK Prime Minister. We are live at Downing Street with the latest. Well, it's just gone 8 a.m. across the Emirates. I'm Shimona Versace in Dubai. As we speak, I believe President Trump is wrapping up his trip in Beijing, a whirlwind 36 hours. And I will say the main takeaway out of all of this is the very strong warning that China issued to U.S. about involvement around Taiwan. So we're going to discuss that in the show. And then not a lot in terms of tangibles or deliverables on the Iran front. And certainly it did come up in conversations, but not enough to suggest that it's going to lead to some massive diplomatic breakthrough. So those are a couple of takeaways. We'll get into it in a moment. But as far as markets are concerned, you can see at the end of the week, we are basically back to risk-off mode. Asia Pacific, the Hanover, negative, down 1.2%. There we're seeing some losses on the Nikkei. The S&P futures also down about 0.3%, though I will say the theme there, of course, has been one of strength to strength. Interesting statistic that I got from our Bloomberg intelligence team. Corporate profit margins for the S&P are the highest they have been going all the way back to 2004. And that really tells you a lot about how strong this earnings season has actually been for the S&P. So something to think about there. Also, Boeing is one of the names that we're watching. Trump told Fox in an interview that China had agreed to buy as many as 200 jets. That is less than the expectation. So let's see how Boeing opens up in trade later today. Brent still in focus. We're still trading at just shy of $107, up 1.1%. We are on track for weekly gains. The strait is still effectively shut. A few vessels are trickling through, but essentially it's stalemate. And this is what's pushing up energy costs here. And then the pound in focus today, we actually reacted to news. And this is strange because the pound has been very immune to political developments in the UK. But yesterday it did react to the news that the Manchester Mayor, Andy Burnham, now has a pathway potentially to get a parliamentary seat. And if he does get a parliamentary seat, then he could actually mount a leadership contest versus the UK Prime Minister. So there's a lot of sequencing there. But the point is the pound has started to react to some of the political turmoil in the UK. Switching over and speaking of prices, energy prices moving upwards. Remember, this week we had CPI, PPI, both of them surprised to the upside, specifically on the wholesale. And then you can see that this is having an impact on fixed income. 10-year US Treasuries are now firmly through 4.5%. So moving up in line with those inflationary pressures. Okay, let's continue the conversation in Asia. Avril Hong is in Singapore for us. Avril, walk us through the price action this morning.
Yeah, against the backdrop of globally what we're seeing in yields marching higher, along with the climb in the dollar for all of this week, this is where you're left with on Asia stocks. It is risk off. And of course, part of it is concern from the US president's talk about how, hey, they don't need the strait to open. So increasingly sounding like a forever war for the US, and the inflationary impact is a concern. So you're seeing the TAIEX, which at one point was 1.5% higher, thanks to a jump in profit for Hon Hai, which of course is an NVIDIA partner. You're looking 0.5% down. The Kospi hit 8,000 at one point. Now it's sitting at the biggest loss we've seen on the gauge since early April. The impact of the war is also showing up in Japan data, PPI, highest since 2023, and that's playing out in bonds in Japan as well after the pressure we already saw just a day ago. The yield on the 10-year at one point moved about 7 basis points. Jumana?
Avril, thank you so much. Avril Hong in Singapore. President Trump and China's Xi Jinping are set to wrap up their 36-hour summit shortly after discussions on trade and business deals were overshadowed by the Chinese leader's warning that mishandling Taiwan could lead to conflict.
It was a fantastic day. And in particular, I want to thank President Xi, my friend, for this magnificent welcome. And it really was a magnificent welcome like none other. And for so graciously hosting us on this very historic state visit. We had extremely positive and productive conversations and meetings today.
The people of China and the United States are great peoples. Achieving the great rejuvenation of the Chinese nation and making America great again can go hand in hand. We can help each other succeed and advance the well-being of the whole world.
Let's go to Beijing now and our Chief North Asia correspondent, Stephen Engel. Stephen, as I'm speaking to you now, it seems as though the two leaders are wrapping up their trip. Trump has described it as being a great couple of days. He says that he discussed Iran with Xi, and then goes on to reiterate that they do want the strait to be open. And then Xi is being reported as saying they've reached a new milestone for the U.S.-China relationship. So what are exactly the tangible deliverables that have been delivered from this 36-hour whirlwind trip?
Yeah, I don't mean to be a pessimist, but it didn't go off the rails, right? So that's a good thing because of all the acrimony over the last year had been built up. Sure, 6 months ago, they met in Busan. We were there. We saw the camaraderie. I mean, it wasn't as warm as we have seen over the last 24 hours, where the two gentlemen were very cordial with each other, if not beaming. And, there was a camaraderie. Let's just put it that way. And that's why, beyond the cordial attitude, there was this state media post about the comments that Xi Jinping made behind closed doors about Taiwan directly to Donald Trump. That was not in front of the cameras, but was very deliberately put out before the meeting even ended. Probably the most blunt message that Xi Jinping, at least face to face with a U.S. leader, has given, essentially saying, U.S.-China ties are they hinge really on how the Taiwan situation is handled. If they're not handled right, it could lead to a very dangerous situation. It is the most important issue for China, he says, in U.S.-China relations. So that could have sort of sent things off the rails, but Donald Trump uncharacteristically sort of has stayed quiet when asked about it. Marco Rubio says, as of we stand right now, there's no change in the view of how the United States view the Taiwan situation. Also, senior diplomats from America have told Bloomberg News that both sides know how each other feel about the Taiwan issue. So that has not derailed this summit, but it did sort of punctuate and detract perhaps the dialogue that Iran was going to overshadow these talks. Iran has not overshadowed these talks. Taiwan has.
Yeah. Well, it was always going to be a big ask to expect some form of a breakthrough around Iran coming out of this 36-hour summit.
Right.
But we did get a second date. So we know that the White House has also invited Xi to come visit in September of this year. So perhaps the conversation can continue then. Stephen, what about all of those executives that flew over? What have we got in terms of actual commercial deals here?
Yeah, probably less than we were expecting at this time leading up to the summit. There was a lot of speculation with Jensen Huang getting on the jump seat of Air Force One in Anchorage and coming here at the last minute, that there could be a possible deal on the H200 chips or even the less powerful H20. We haven't gotten an announcement yet. In fact, my colleague Anne-Marie Hordern had a fantastic interview with Jameson Greer, the U.S. trade representative, earlier this morning on Bloomberg Television here in Asia, here out of Beijing, essentially saying, you know what? Chip export controls were not even discussed in that 2.5-hour state bilateral meeting between Trump and Xi, which is a surprise. We thought that this was going to be one of the key deliverables. We did get some news about Boeing jets. You mentioned that, I believe, at the top. 200 jets or thereabouts, not the 500 that was speculated in the market. So that was a little bit of less than expected. But we still need to flesh out those details from Boeing or from those orders if they do come to fruition. Keep in mind, back in 2020, China did order a big order of jets. It never came to fruition because of COVID. So again, this is, speculation on how far China will fulfill that. Beef is coming back to Chinese households. Soybeans, according to Jameson Greer, they're coming back. We'll have to wait on some of the other commercial deals.
Bloomberg's chief North Asia correspondent, Stephen Engel, thank you so much for your reporting the last couple of days. Joining us now is Julia Rockneford, senior lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, good to have you with us. Would you describe this trip as having been a success for President Trump?
It depends how you define success. I think it hasn't been very fruitful meeting, not what Donald Trump probably expected sometime earlier into the war with Iran. He was, I think, expecting to come to see Xi as almost a victor in that conflict and to dictate some of the conditions, to Xi in particular to lift some of the restrictions that China imposed on the export of the rare earth elements. But that has not happened. The war with Iran subsided, but is still de facto continuing. So despite Trump trying to present it as highly successful, great meeting of the two friendly, great nations, or how President Xi put it, on the path to development that they could do together, and that's the most important relationship globally, it wasn't much. And yeah, there was an interesting point that I think it's not a coincidence that China probably tried to make. At the same time, there was a visit of the president of Tajikistan taking place. What do you make of it? Of a small country which somehow it wasn't cleared out of this schedule of the Chinese president. And in fact, more attention was given to it in the China media than to the visit of Donald Trump.
At least on the first day, I believe. I want to ask you about China on Iran. It took a couple of days for the foreign ministry to actually say anything, and it was only this morning that they put out a couple of comments saying that they're urging the reopening of the waterway as soon as possible, urging to solve the Iran nuclear issue, but through dialogue, saying that the war should not continue. How do you read those comments coming through from China and their appetite to actually be involved in some of the diplomatic discussions?
It's more, I find it as being more of a performative statement on this. Of course, China is dedicated to peace, and that's why it has been backing Pakistan as a mediator, and it would like to see the Strait of Hormuz open. But at the same time, China has not been that affected as probably was expected on the part of Donald Trump and his administration, because it still relies on its energy mix. It relies a lot on coal and a lot on renewables. And besides that, some of the Iranian oil tankers were able to pass through the Strait of Hormuz and to deliver oil to China. And China also stocked up on oil and gas before the current war unfolded. So there is not much of the pressure that China is experiencing there. According to Donald Trump, President Xi agreed not to supply weapons to Iran, but that also doesn't tell us much, because China, there has been no proof that China has been supplying weapons per se to Iran, but intelligence and targeting data, that wasn't mentioned, and China probably will continue doing that, because that's what it's likely has been doing since the start of this war. So on that front, I know the issue has been touted a lot, especially in the American media, that is going to be big on the agenda, Iran, but not much also is coming out of it.
Yeah, agreed. Julianne, of course, attention has shifted elsewhere in the past week, but we're still very much in a situation of an impasse, a stalemate on US-Iran. The Strait still effectively shut or being monitored, controlled, however you want to call it. How do you see things evolving from here? How are we going to break the impasse?
There is a resistance on the part of Trump to resume the conflict. And I don't know, maybe he thought that he can come out with something from the meeting with Xi, which seems to be mostly, as your colleague just pointed out, the agricultural deals and not much more than that. So he'll lay back on the plan B, so to speak, bringing the business elite with him. Saying that and thinking about his unwillingness to resume this conflict, it might enter the frozen stage for a while until some sort of negotiations will be resumed. Because despite of everything that is being said by the State Department or by Pete Hegseth, Iran still has the capacity to inflict a lot of damage, to provide for the blockade of the Strait of Hormuz. And in fact, it has been even restructuring the whole situation in the Strait of Hormuz by establishing effective control over it. So it's not just a blockade, but it's trying to define the new status quo in there. And maybe in that frozen state, the US will have to slowly pull out and lay back on the option of negotiations and reaching something that would be reminiscent of JCPOA.
Yeah. Okay. Julia, thank you so much. Julia Rockneford, Senior Lecturer at the School of Law and Governance at Taylor's University, Malaysia. Now, still ahead, we got the market outlook with Neovision Wealth Management as fresh comments from President Trump on the Strait of Hormuz reignites inflation fears. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Stocks are under pressure after President Trump told Fox News the U.S. doesn't need the Strait of Hormuz to open, raising concerns over inflationary pressures. Joining me now is Ryan Lamond, Neo Vision Wealth Management CEO and co-founder. Well, Ryan, you're joining us from Paris today. And, you know, both you and I are active users of LinkedIn. And I want to draw viewers to a post that you put up a couple of days ago of the culinary type. You posted a picture of an ice cream that you were picking up from, I think it is Bouza Bashir. I think it was Ashta ice cream. And I got myself thinking, are you beginning to see higher food prices show up because of the energy shock from the region? Tell us about the cost of your Bouza Bashir.
Absolutely. Costs are rising. We've seen it on PPI. We're seeing it on CPI. We will see it on PCE. We're going back to higher and higher inflation. This will take time to resolve itself. We're not seeing higher oil prices because of what you mentioned a bit earlier. It's the reserves, and particularly China has massive reserves. However, other countries do not have that luxury. As soon as these reserves get really close to being depleted, and we should see that around mid to end of June. This is when we're going to see much higher oil prices, and all of this will translate into more and more inflation. I've been talking to you for quite a few years now, and I always said it, inflation does not come in one cycle only, it comes in multiple cycles. We're going to see something very similar to the 1970s scenario.
Yeah, and indeed, many industry leaders from the energy space are warning about that happening, right? I mean, the IEA obviously continue to repeat that this is the largest energy shock. You hear leaders, CEOs of companies, energy companies around the world warning that things are really about to start getting perhaps a lot tighter in the next month. What does that do to the what appears to be the Teflon trade that is AI right now?
Yeah. So basically, in the case when faced with inflation, what we do, us investment managers, is obviously invest as much as possible to protect against that inflation. And usually go for stock markets because they usually protect the most against inflation. We don't go to fixed income because interest rates rise up because central banks fighting inflation. Now, in the case of the tech trade, we decided to stay away again because we believe this is a bubble. It's completely overblown. The S&P 500 today, when you invest into it, you're actually investing into tech. You're not getting diversification. So that's why we're going towards geographic diversification across the world and across asset classes. As you know, we still have 25% of our portfolio in gold. We have Swiss equities, we have Brazil, a few other emerging markets, which have done very, very well without the risk of overvaluation that we're seeing in tech stocks, which I have a few question marks on the business model around AI in the US. So this is how we're positioning. Just one last point regarding gold. Yeah. If you look at gold, if you look at it year to date, over 1 year, 2 years, 3 years, and 5 years, it has beaten the S&P 500.
Okay, yeah, no, I know that you are definitely a gold bull, and we've discussed it many times. And I see from your notes that you've got about 25% of your portfolio allocated to gold. I just want to go back to something else, which I think is becoming a bit of a technical feature in the S&P as well. And you raised this in your notes. 0-day to expiration options account now for about 60% of total S&P options. To what extent do you think this may be driving some of the recent uptick that we've been seeing in the S&P?
Well, it has been creating the momentum that has been driving the S&P and the tech stocks higher and higher. Now, what's even more dangerous is that this is mainly driven by retail investors. So this is quite dangerous as well. Add to it the negative gamma of dealers. This is even an additional danger. Now, let's look, where is this coming from? Where's funding is coming from? This is coming from M2. As you look at M2 in the US monetary base, it's the record high. The US economy and the financial system is flushed with cash. The Federal Reserve is buying treasuries again, balance sheets rising up again. So liquidity coming to the system. Add to it the famous yen carry trade, which is still in place, and that's why I think Treasury Secretary Percent was in Tokyo to speak with the Japanese, because he does not want the Japanese to sell treasuries to defend the yen or increase interest rates, because this will break the carry trade, and these daytime options will basically no longer be, and this will break the whole tech trade that we're seeing at the moment, which is driven by retail ultimately.
Yeah. Okay, Ryan, thank you so much for coming on and giving us your prognosis on the markets here. Ryan Lawan, CEO and co-founder of Neovision Wealth Management. Now for a look at some of the other stories we're following today. An Indian flagged ship reportedly sank in the Strait of Hormuz this week after coming under attack near the coast of Oman. The Wall Street Journal cites India's foreign ministry saying that Omani authorities had rescued all the crew after the attack without saying who was behind it. Meanwhile, the U.S. military says it has redirected 72 commercial vessels and disabled 4 since the start of its blockade of the waterway. Federal Reserve Governor Stephen Miron says he will resign once incoming Chair Kevin Warsh is sworn in or shortly before. The move was expected as Warsh will take Miron's seat on the Fed's Board of Governors. Miron says he supports Warsh's plans to overhaul Fed communications and balance sheet policy. He also says the outgoing chair, Jerome Powell, can assist in the transition.
Transitions are important. And I think that, it is maybe helpful to have someone there to give advice. But I still think it's important that it be a transition, because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split.
Cuba has run out of the fuel oil it needs to keep its power plants running as civil unrest begins to stir. Social media posts show sporadic protests breaking out, with people banging pots and in some cases lighting fires. President Miguel Diaz-Canel blames Donald Trump's pressure campaign, posting on X that the dramatic decline in conditions is due to what he calls genocidal U.S. energy blockade. SEC's fraud case against him. Adani's nephew Sagar, who is also part of the proceedings, has agreed to pay $12 million. The Adanis refuse to admit to any wrongdoing in the SEC settlement deal. U.S. courts will still need to approve the Adani settlement deal before the terms are finalized. And let's take a look at how equity markets are faring. It is the final trading day of the week, a big one from a geopolitical perspective, with President Trump rounding up his summit with President Xi in Beijing, heading out shortly in what he is describing as a great trip. But I will say, in terms of actual takeaways for the market, not a whole lot to go on here. For the week as a whole, S&P and the NASDAQ are tracking gains. S&P is up 2.2% for the week, NASDAQ up 3.2% as we continue to speak about strong micro drivers. But overnight, the tone has turned a little bit more negative, with all of these indices pointing to negative. Take a look at European markets, also down 1% as well, as the traders possibly account for a sustained suspension or at least effective closure around the Strait of Hormuz. So no breakthrough coming through from China. Now, coming up, the Arab Bank for Economic Development in Africa says the continent will need more financing as fuel and fertilizer costs rise. Another impact that the effective closure of the strait is having on global commodities. We'll bring you a conversation with him next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump and Xi Jinping set to wrap up a summit that's delivered little in the way of tangible deals, with China's leader warning that Taiwan is the issue that could trigger dangerous clashes. China now calling for an urgent reopening of the Strait of Hormuz, as Trump says Washington can live without access to the waterway. Raising the stakes for Starmer, the Manchester mayor now seeking to join the race to challenge the UK Prime Minister. We are live at Downing Street with the latest. Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersecci in Dubai. A bit of a risk-off tone prevailing this morning. Abir Abu Ahmad is here to walk us through the price action. Abir.
Good morning, Jumana. Well, look, the market seems to have forgotten about the Xi-Trump meeting that happened yesterday. We're now full back in focus to the Iran story. And those comments from President Trump to Fox News saying that he doesn't need the Strait of Hormuz to open at all. And that's reflecting across the S&P futures this morning, now down 0.4%. We also seem to have forgotten about the AI euphoria, the tech story, the earnings that are coming out of the United States that have led to multiple rallies. S&P closing again at a record high yesterday. Today, as you mentioned, a risk-off sentiment is prevailing in markets. Asian equities down 1.4%, led by South Korea's Kospi. So the yo-yo moves in South Korea's main gauge is having an impact on Asian equities. It was down more than 3% earlier in the day. Now, the one thing that's in the green today is oil. Brent is ticking up higher 1.2%, $107 a barrel. Now, this is a note from our MLife team earlier saying that the next few weeks we'll see a stronger dollar, a slump in stocks, and high volatility across risk assets. And this is because of the return to the Iran war and that escalation in the tone that we saw from President Trump earlier, despite him talking to his Chinese counterpart about finding a solution, but both agreed no nuclear weapon in Iran. Now, the inflationary risks that stem from this increase in oil prices and the CPI report that we saw earlier in the week in the United States is also leading to a gain in the 10-year Treasury yields, now gaining 4 basis points, Jumana, in the 10-year notes. We're also seeing similar moves in the 2-year notes and the 30-year notes.
Bloomberg's Abir Abu Hamad in Dubai for us. Thank you. Now, President Trump says China is willing to support negotiations with Iran as Washington pushes for a diplomatic resolution to reopen the Strait of Hormuz. In an interview with Fox News, Trump said she assured him Beijing would not supply military equipment to Tehran. For more, let's speak to Bloomberg's executive editor for MENA and Russia, Stuart Livingston-Wallace. I'm also just going to bring some fresh comments just as Trump was wrapping up the meeting. He said, we did discuss Iran. We feel very similar on Iran. We want that to end, and we don't want them to have a nuclear weapon. We want the straits open. And again, a bit of a contradiction to what he said perhaps a couple of hours earlier in the Fox interview. Essentially, though, Stuart, have we got anything out of this summit that could push forward diplomatic discussions vis-a-vis Iran?
Nothing visible, but that doesn't mean that something might not happen. I think what's interesting here is there appears to be an attempt by Iran to bring China out of that by saying we will let Chinese ships through. That was announced yesterday. We'll see what happens. It said 10 ships went through, but of course there's a US blockade that they've got to get through as well.
Yeah.
It is, however, it is absolutely true to say that this is in China's interest to get Hormuz open again. Hormuz fundamentally flows eastwards, not westwards. It is Asia that has the most at stake with us.
Yeah. What is the status of the strait now? And I feel it's a question that we revisit every week, but it seems like there are a trickle of vessels getting through, but then also a vessel got seized yesterday.
Yeah, so it's very hard to tell. You're absolutely right. There are a trickle of vessels getting through. We often don't find out about it until sometime after the fact because the transponders go back on when they're sort of off the coast of India or something similar like that. However, what's interesting, if you look in the physical oil market, there are spot cargoes being offered of things like Iraqi Basra grades. Now, that is an indication that something probably got through, but it is an only indication. So the moment is a little bit smoke and mirrors. But look, it is fair to say nothing like the normal volumes.
So what I find interesting is it's been almost 3 months now, and it's sort of evolved into this frozen conflict. There's an impasse around the strait, unclear where we're going to go diplomatically. At the same time, you are hearing from more and more business leaders from around the world expressing their support in the region. Yesterday, one of our colleagues, Caroline Hyde, was speaking to former Barclays CEO Bob Diamond, who says, I probably have more confidence today in the leadership and future of economies like Qatar and the UAE than I did before the Iran conflict. That's quite a big statement.
Yeah, and it's not isolated. You've seen these sort of statements from lots of business leaders, particularly from the investment community. There have been these sporadic reports of, deal making is going to slow, deal making. There's no evidence whatsoever of that. I think there is perhaps a refocus in terms of what the priorities are, and you've seen that in all the Gulf countries because clearly the situation has changed. But all the reporting we've done has shown that the investors continue to come into the region, deals are still getting done.
Yeah, and I spoke to Bill Ford, the CEO of General Atlantic, earlier this week. They just received a $500 million commitment from the QIA to your point, that deals and chunky deals are still being executed. Yep. Stuart, thank you so much. Stuart Livingston-Wallace, Bloomberg's executive editor for MENA and Russia. A third round of direct negotiations between Israel and Lebanon has begun in Washington. The talks come days before the expiration of a truce that reduced but didn't stop the fighting between Israel and Hezbollah. Bloomberg's Dan Williams joins us from Jerusalem. The backdrop to all of this is this very shaky ceasefire that's going on right now in Lebanon. How much success have these talks actually yielded so far?
I think it would be fair, Jemana, to say that these talks are largely about keeping up appearances. That is not as trite as it may sound, given that just a few months ago, you could be penalized by law, perhaps prosecuted in Lebanon for even discussing the idea of peace with Israel. And now you have open negotiations between the sides, between the government in Beirut and the Israeli government, hosted by the United States. As you noted, the firing continues. The bloodshed, the mounting death toll, certainly in Lebanon. And just an hour ago, the Israelis published the name of another soldier killed in a Hezbollah mortar attack. So very much in doubt as to whether this could be described as a full ceasefire. However, it has to a degree delimited the fighting to southern Lebanon, reducing attacks by Hezbollah across the border into Israel and attacks by Israel on Beirut. I think the idea is, certainly when it comes to the Trump administration, to keep up the idea that somehow they may come up with a formula for defanging Hezbollah and bringing those countries together, and at the very least keeping up a narrative of peacemaking in parallel to what would appear to be an Iran war that is on the path to be resumed very soon.
Yeah, I want to bring back to you what you just said, which is keeping up the narrative of peacemaking. How do you move forward from here? And what basis are they going to move forward, given, again, the considerable sticking points that still exist, including the absence of a full ceasefire per the Lebanese government, and from Israel's perspective, the lack of a full plan to disarm Hezbollah?
If you ask the Israelis, the formula is to get rid of or drive back Hezbollah in a way that the Lebanese have undertaken to do for several years, including as part of a UN Security Council resolution. However, the Lebanese army is widely regarded as potentially well-intentioned now, but lacking the capacity to take on the militia that remains very well armed despite having been degraded by 2 years of intense fighting with Israel. It's potentially here that the Israelis are trying to further degrade Hezbollah to the point where the Lebanese may feel emboldened to take them on. Potentially behind the scenes of these talks, there are negotiations about Israel providing intelligence support, the Americans providing increased aid to the Lebanese military so that they can carry out that task. But yes, the big open question on progress here is how can Hezbollah be dealt with in a manner that would satisfy the Israelis that their northern security has been taken care of, and would satisfy the Lebanese in that the Israelis can finally withdraw from those outposts set up in southern Lebanon, and of course allow the return of hundreds of thousands of Lebanese civilians that were driven out of their homes in southern Lebanon when Israel launched that recent offensive against Hezbollah there.
Bloomberg's Dan Williams in Jerusalem, thank you so much for the reporting. Well, the disruption in the Strait of Hormuz is raising the cost of fuel and fertilizer imports across Africa, increasing pressure on some of the continent's most vulnerable economies. The president of the Arab Bank for Economic Development in Africa, Abdallah Al-Musaiba, told us exclusively that the lender is stepping up trade finance support to help manage the shock.
Most of the fuel and fertilizers comes from the Gulf region. And when they close the Hormuz, its effect on not only Africa, on all over the world. And Africa part of this world. So when they close, they have to go to other markets and the prices goes up. And that gives us a responsibility to offer more money for the African countries so they can buy the fertilizers and the fuel for their countries. So it's change. It's need more money. It's need more effort because they will try to find other markets than the markets that they used to. So we put more money for trade finance pillar that we finance. When I said more, the LC or the trade finance operation that we finance cost, let's say 100 million, it will be 150. The ones that cost 150, it will goes up. It depends on the country and how much it needs. But everything goes up and we have to provide them with the money to help them in their these few months.
So your analysis of the risk assessment of some of these countries, it seems like it hasn't changed then. Is that fair to say? It seems like you're deploying more capital, not holding back.
Yeah, of course, it's our duty because our mandate is to work in the African countries, the 44 African sub-Saharan countries. And if we don't stand with them now, so it's not our work. Our work and our mandate is to help them. Maybe we cannot help them in finance more in the private or the public sector, but in trade finance, they need more.
Abdullah Al-Musaibi, president of the Arab Bank for Economic Development in Africa, speaking with Bloomberg's Jennifer Zabazaja. Now for a look at some of the other stories we're following. An IMF delegation is in Cairo to conduct a 7th review of its extended fund facility program and the 2nd review of its resilience and sustainability facility. The IMF says the reviews could be completed over the summer if a staff-level agreement is reached, paving the way for a roughly $1.6 billion disbursement pending board approval. Bob Diamond has praised the governments of the UAE and Qatar for their response to the Iran war. The former Barclays CEO says the two countries strengthened their standing through strong economic management during a period of regional crisis. Diamond says he now has greater confidence in the leadership and future of the UAE and Qatar economies than before the conflict. Buyout firms General Atlantic and KKR say they continue to see fundraising and investment opportunities in the Middle East despite the Iran war. The firms say the region's deep pools of sovereign wealth funds are still being managed with a long-term perspective, with investors continuing to deploy billions of dollars into global deals. General Atlantic and KKR also say they remain committed to expanding their presence in the Gulf as regional economies push ahead with diversification plans. Coming up, DP World says the Iran war is beginning to push up costs across Africa. Our conversation with DP World Sub-Saharan Africa CEO Mohamed Akouji next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary. We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovations.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. DP World says the Iran war is beginning to push up costs across Africa as higher fuel prices and supply chain disruption ripple through the region. In an exclusive interview, Mohamed Akouji, DP World Sub-Saharan Africa CEO, says the impact will deepen if the Strait of Hormuz remains shut.
Yeah, it's had a huge impact because obviously, supply chains are being disrupted through what is going on in Iran must have an impact on Africa. A lot of our cargo comes through the Middle East into Africa. So definitely we've seen certain markets on the East Coast being impacted. The West Coast less impacted in our business on the ports and terminal side. But what we have seen is shipping lines now doing direct services on the East Coast, which has mitigated some of the volumes. So our business is dealing with the current situation well. Obviously, the fuel price impacts has a huge impact on our logistics business because we operate over 7,000 trucks on the continent. So we've got to increase our pricing, and that's not great because that results in inflation. So I think the impact on the consumer and the economies in Africa with what's going on in Iran will start flowing through, and that's not good for the consumer economic growth. So so far limited impact, but certainly if this war continues and the Strait of Hormuz remains closed, then there'll be a deeper impact on Africa from our perspective.
What are the numbers for me? Because you spoke about the price of fuel increasing and you subsequently having to increase your prices.
So fuel has increased in a market like South Africa, where we have our biggest fleet by probably 70-75%. And then in terms of our contracts, fuel is a big component of our cost, and we pass that through to our customers, who then pass that on to the end consumer. So in a market like South Africa, we work for retailers, FMCG companies, healthcare companies. So ultimately that, has a knock-on impact on the cost of food, cost of everything. That's the impact it's had on our business. But we don't take fuel risk. So, we have to find a way to pass it on.
Mohamed Akouji, DP World Sub-Saharan Africa CEO, speaking to Jennifer Zabazaja there. Now for a look at some of the other stories we're following. Abu Dhabi's Libad Holding is joining local and global partners in an investment venture targeting $30 billion of infrastructure projects. The move underscores the central role the new sovereign wealth fund is likely to play in the Emirates' ambitions. And the venture will target opportunities across energy, transportation, logistics, and waste management in the GCC and Central Asia. Abu Dhabi will build the first Sphere venue outside the U.S., with Yas Island selected as the location. The project will be backed by $1.7 billion in construction investment and will have capacity to host 20,000 people. Coming up, a potential new challenger to UK Prime Minister Keir Starmer is emerging inside the Labour Party. We'll have the latest next. This is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final. The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Shimana Bersachi in Dubai. A potential challenger to UK Prime Minister Keir Starmer has moved closer to a return to Parliament after Labour lawmakers stepped aside to open up a seat. Bloomberg's Alex Morgan joins us from Downing Street in London. So a lot of news coming through in the UK yesterday, but maybe let's just start with Andy Burnham, the Greater Manchester Mayor, and what could happen from here in terms of this by-election results and how that ultimately could impact potentially the UK Prime Minister Keir Starmer.
Well, morning, Jemana. They say a week is a long time in politics, and we were talking just a week ago, rounding up those local election results, which were disastrous for the governing Labour Party. Well, here we are now. The consequences taking us all the way to Downing Street. Keir Starmer not yet facing a formal leadership challenge, but you can see his challengers circling. So who is Andy Burnham? Well, he's long seen as the greatest challenger to the Prime Minister. Polling-wise, well, it's predicted he would beat Keir Starmer in a head-to-head. He also holds a net positive rating with voters, according to YouGov. So he is seen by many, particularly on the left of the party, as the man who could not only take Keir Starmer's job, but could potentially lead Labour and take on the Insurgent Reform Party, who we talked a lot about last week. That's Nigel Farage's party, who gained hugely in those local elections. Andy Burnham now lining up his path back to Parliament, step one. Then step two, if he wants to go for the leadership, he'd have to trigger a contest, and then we would be into the formal challenge. So it's a step closer, Jemana, but we are, if you like, in a bit of a phony war, not yet at the stage where Keir Starmer is facing a formal challenge at this moment.
And again, for those not super familiar with the weeds of UK politics, Andy Burnham is described as being from the soft left part of the Labour Party. What does that actually mean for markets, Alex? How does that translate to how markets could perceive him potentially mounting a leadership contest against Starmer?
Yeah, and this is the big thing. I mean, we saw a nearly 1% drop in the pound just on the news that Andy Burnham was trying to return to Parliament. That news came after trading in gilts had closed yesterday. Obviously, we'll see what happens at ATM UK when trading opens. But we know that Keir Starmer and Rachel Reeves did an awful lot to roll the pitch, as it were, for Labour ahead of the general election. That was 2024, to say we are safe stewards of the economy. We're going to have these fiscal rules, which means we're not going to be borrowing for day-to-day spending. And investors have liked that. That was the stability they wanted. Now, we've seen already 30-year yields reach their highest since 1998, just on the instability around Starmer's position. The reason Burnham is seen as potentially ruffling the feathers of bond markets is he could loosen those fiscal rules. He could maybe lean to the left of the party. He's certainly their preferred candidate, and go for some more spending, loosening the government's purse strings in that sense. We'll be looking, of course, at 8 o'clock when the markets actually open. But at this stage, Burnham's past comments saying the country is in hock to the bond markets, he later said those were taken out of context, they might be coming back to haunt him.
Yeah. Alex, let me just ask you a question about timing. How long is this all going to take to play out from the by-election to a potential leadership contest?
Well, Jemana, you mentioned the weeds of UK politics. We're going to have plenty of time to be wading through those, because the way this is going to go, it's not going to be instant. The Labour Party faces two choices, really. One, somebody who's currently in Parliament could trigger a leadership challenge now in 10 minutes, and that could kick off a shorter contest. That seems to be unlikely. They've not coalesced around a candidate with enough support. So if Andy Burnham is going to take this longer road to get back to Parliament, win a by-election, by the way, to do that, and kick off a contest, we're talking weeks, if not months, of this continued instability. This at the time that Keir Starmer and his allies have said that the Prime Minister is staying put in number 10 Downing Street. Rachel Reeves just yesterday warning that Labour should not plunge the country into chaos, her words, with a leadership challenge. So we are looking, Jemana, not at a quick resolution to this, but a continuing instability, potentially this dragging on, this phony war phase for weeks and months.
Yeah, it sounds a bit like the impasse that we have over here in this part of the world around the Strait. Bloomberg's Alex Morgan outside 10 Downing Street in London. Thank you so much. Well, let's round up the show with a look at how markets are faring. Equity futures, we have leaning towards negative, so a bit of a a downer handover from Asian Pacific equities this morning. European markets, take a look at that, down 1.2%. I will tell you, one of the starkest drops has been on the Kospi index, down 5.3% overnight. And that is in response to some of those semiconductors, the ones that had done extremely well the last couple of days, coming off a little bit to Samsung and SK Hynix dragging there. So the setup, not so positive, but over the course of the week, it has been a more positive week. And a lot of focus has been on that summit between Trump and Xi. Not a lot, though, in terms of actual deliverables for market participants. All right, that is it for Horizons Middle East and Africa. I'm Giovanna Bersecci in Dubai. We'll be live from our London studio next week. Stay with us for Daybreak Europe.
AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks and bonds fall on inflation concerns after President Trump says the US doesn't need the Strait of Hormuz open. A working lunch. Presidents Trump and Xi are currently meeting in Beijing this hour, with both leaders touting progress on the second day of the summit. And in the UK, political uncertainty weighs on the pound as investors watch for the next moves on a potential leadership challenge to Prime Minister Keir Starmer. Well, a very good morning. Happy Friday, everybody. Let's check in on what's happening in these markets. We have seen the stock rally on the AI trade hitting a wall in the Asian session, although the MSCI Asia Pacific Index does remain on track for a 6th straight weekly advance. Currently down nearly 1.9%, and futures pointing south on both sides of the Atlantic as well, although we had that record close stateside yesterday. Now flip the board over to the cross-asset picture. Oil is heading for a weekly advance with the Iran war still at an impasse. Brent currently up 1.1% at $106 a barrel, pushing 107. The Strait of Hormuz, as I say, still effectively closed, and President Trump saying he doesn't need Hormuz open. So that kind of worrying for oil traders. It pushes up bond yields on the inflation concerns, the 10-year Treasury yield trading at 4.52. And of course, we've got a keen eye on sterling, given the drama in British politics, the pound tumbling further to $1.33 as Greater Manchester Mayor Andy Burnham takes the first steps towards challenging Starmer for the top job, a month low on cable. Now let's look at the risk events on the docket for today. At 2:15 p.m. London time, we've got US industrial production expected to have increased in April, having dropped in March. It's also Jay Powell's last day as Fed chair, clearing the way for Kevin Warsh. And if you're a money manager and you haven't filed your 13F yet, telling us which stocks you owned 6 weeks ago, well, get on with it, because today is the filing deadline. Right, let's set you up for a happy Friday. We begin with President Donald Trump and Xi Jinping touting progress made at their summit in Beijing as it draws to a close. Trump says that he discussed Iran with Xi, saying that they both feel very similar about wanting the conflict to end. It comes after Trump told Fox that the US doesn't need the Strait of Hormuz open at all.
We now produce more than if you combine Saudi Arabia and before the war. If you took Saudi Arabia, Russia, put them together, we're doing twice as much oil and gas as they are. Think of that. It's amazing.
Venezuela,
you know what that was?
We're two.
Called drill, baby drill, right?
Oh, well, I mean, when you really think about it, if they have a problem with Iran, and they need the strait more than we need it open,
we don't need it at all.
We don't need it at all.
We don't need it at all.
Bloomberg's China correspondent Min Min Lo joins us now from Beijing. Morning, Min Min. You heard from President Trump there. Does that align with President Xi's stance on the Iran war now?
Yeah, interestingly, if you look at the Chinese readout of what the two men discussed yesterday at the Great Hall of the People, the Strait of Hormuz and Iran did not feature in the Chinese readout at all. Of course, it got considerably more attention from the US version of the readout, and according to President Trump, China says that it will support the peace negotiation, that China doesn't believe that the Strait of Hormuz should be militarized, it doesn't support the imposition of a toll in the strait. And from the Chinese Foreign Ministry, we heard earlier, just a couple of hours ago, the Chinese Foreign Ministry did put out a statement, but not telling us anything new, repeating the stance that yes, China will support peace negotiation, that the war should end, but realistically, just how much leverage is China willing to put on Iran to get it to back away? We're not hearing a lot of that. The US readout did mention that China is pledging to buy more energy purchases from the US, but again, we didn't get specifics as to how much purchase commitment is there. So realistically, not a lot of forward movement on Iran. Of course, Trump can say whatever he wants about how the US doesn't need the strait to reopen, but we did see oil futures climbing on the back of what he said.
Okay, so Trump expressing that on the Middle East, optimism as well, Min Min, on trade, saying that they've made some fantastic trade deals in Beijing. The US Trade Representative Jameson Greer saying he anticipates China would commit billions in American agricultural purchases. Let's take a listen.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years. And we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them. Things we think we should be buying from them, trying to facilitate trade in that area. And then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
So, Min Min, how would you evaluate Trump's trade wins on this trip?
Yes, if there's one thing in common for the two sides, especially if you look at the readout, is trade and investment. I think the key message from the Chinese side when the American CEOs were meeting with Premier Li Qiang and the other Chinese leaders yesterday is that China is willing to open its doors wider to these US businessmen. And in terms of trade, you heard James and Greer saying earlier, double-digit billions of agricultural purchases. The Boeing deal came through, but it was less than anticipated, right? There had been huge anticipation that it could be a mega 500 jet deal, but we got a 200 jet deal, less than anticipated, but still quite a big breakthrough and a game changer for a company that had seen nearly a decade-long freeze in orders from China. The last time there was such a big deal was back when Trump first visited in 2017. Soybeans, as Greer said, not much forward movement there because there was already negotiated back in Busan. But still, I think the big one was beef, right? China had approved the licenses for hundreds of beef plants in the US after allowing those licenses to lapse last year. That led to a collapse in beef imports last year. But the key question is, yes, there are the pledges, but how big is the follow through? Because remember the environment here, a lot of the beef producers in China are already struggling with overcapacity and sluggish growth. So whether or not, China follows through, how big the volume of the trade, that's something we still want to keep an eye on.
So as the summit's wrapping up, Min Min, has the relationship between these two countries fundamentally changed? What should we take away from it as it ends?
I think the overall mood has been one of warmth, right? The photo ops have been fantastic. You saw the images earlier with President Xi hosting Trump at Zhongnanhai, which is where the Chinese leaders live and work, including President Xi himself. So quite a prestigious place to host President Trump. So optics-wise, it's been great. And President Trump as well invited Xi to visit in September. Now remember, the trade truce was due to expire sometime around end October, early November. So September, that visit is coming just ahead of the expiry. And if things go well, perhaps that trip could be when we could see the two sides cement another extension of the trade truce. But I think where there has not been any forward movement is in the geopolitics, right? You look at the readout, very big differences when it comes to the issue of Taiwan. Heavy focus from the Chinese side, no mention of that on the US side. And there was a particularly awkward moment where President Trump, coming out of the Great Hall of People yesterday, he was asked by reporters at least 3 times whether Taiwan came up, and Trump remained absolutely silent on that matter. He just ignored the question. And remember, from the Chinese state media side, that was the first update that came through while the two men were still sequestered in that room, setting the agenda here on the news media about the importance of Taiwan for China, the most important red line here. So when President Trump leaves China in about an hour from now, what happens next? Is he going to approve that record arms sale to Taiwan? And what is that going to do for US-China relations? Because China warned that it could push relations to very dangerous territory. So again, we heard from Marco Rubio, he's saying that both sides understand that there can be no change in the status quo. It would be very bad for both countries. So on that front, as well as on Iran, not a lot of forward movement. I think the big deliverables really is the 2 Bs, right? Beef and Boeing.
Min Min, we appreciate all of your fantastic coverage for us out of Beijing. We'll see you later in the hour, but thanks for now, Bloomberg's Min Min Lo. Well, let's get the view of the markets, shall we? From Asia, we can go to Avril Hong in Singapore now and see how they're reacting to President Trump's latest comments and that broader AI rally. Avril, what are you watching?
Yeah, it's not looking like an Asian market that has the Friday feeling today, Lizzie. I mean, it is red across the board, and this is against the backdrop of yields rising along with the dollar all of this week. That's really problematic today for Asia stocks, especially the AI trade. And the poster child for that in Asia, the South Korean gauge, is not escaping it either. The Kospi that has gone from 7,000 to 8,000 earlier today in a span of 7 sessions. You're seeing that heavy selling, and the memory stocks, the South Korean chip makers, SK Hynix, Samsung Electronics, are tracking the declines that we saw on Micron. Maybe investors are taking profit off the memory trade, but also I think it's the concerns being compounded here of inflation, especially when the US president has been talking about, hey, we don't need the strait to open, and that risk off is being felt across the Asia gauges, not just in South Korea. And I'll flip the board. It's also being felt in Japanese bonds. We talked about the long end just a day ago, and today the pressure is being very keenly felt on the 10-year yield. We did get data showing that PPI, so producer inflation, jumped to the highest level since 2023. And overall, it's been an era of persistently high yields in Japan. And that seems to be something we're going to have to get used to, given the impact also from the Iran war. Lizzie?
Avril Hong, thank you so much. Avril in Singapore there. Well, that is a global story that Avril was talking about, happening both in Japan, but also we're seeing it globally. Rising oil prices pushing global bond yields higher overnight as President Trump's comments on the Iran war fuel broader inflation concerns. Let's get a little more now. We can speak to Bloomberg MLive strategist David Savage. David, surely at some point higher yields are going to pressure corporate bottom lines, and the tables will turn for equities as well. Is that what we're seeing this morning?
Good morning. I mean, equities are definitely taking notice of higher bond yields today. That's certainly true. And Avril covered, the sell-off we're seeing here in Asia. U.S. equity futures lower, Euro Stoxx 50 futures also lower. Again, I think it's important to see the context of where equities have gone in the last month and even just the last week. Ultimately, I think the level of bond yields will be less important than the drivers behind those bond yields for equities, right? So we know bond yields are moving higher because inflation is inflecting higher and accelerating. So, U.S. headline CPI at 3.8%, we're moving to a world we're going to have a 4 handle on U.S. headline CPI. Obviously, that's pressuring bond yields higher. But, bond yields have also potentially been moving higher because the growth outlook for globally and certainly in the U.S. is also been more resilient than we would have thought, even a few weeks ago. And so we've seen that in copper prices and industrial metal prices. But today we've seen the dollar really, continue its surge, this week. And, some of those industrial metals have come off as well. So if the growth picture starts to worsen and we still have this inflection higher in inflation, that's when you could have it spill into equities. But I'm not sure we're at that stage yet. But that's why I think watching the dollar is really, really key.
So how do you think that investors are going to balance the focus on the AI trade on the one hand, as we've seen in recent weeks, and the geopolitics around the Strait of Hormuz, whether or not it reopens?
Yeah, I mean, I think certainly the Strait of Hormuz is still very much a reality for the bond markets, right? We know it's feeding into inflation. We know that through commodity prices. We know that the disruptions still to come as it pertains to fertilizer that'll feed into some of those headline numbers, is only going to keep putting upward pressure on bond yields. And until bond markets believe that the Fed is going to get serious about, where inflation is moving, bond yields, particularly at the long end, are going to continue to move higher. In terms of the equity markets, I think in the very near term, we do have a bit of a catalyst, vacuum here. We have NVIDIA earnings later next week. The summit is, ending today. So it is a potential that we start to see the Hormuz, tensions start to manifest a bit more for equity markets. But I think, longer term or in the medium term, this AI trade is going to need a much more, significant catalyst, either a very significant, re-escalation in the conflict, some sort of exogenous shock of that nature, or you're going to need to see something break within the AI trade to really see it be disrupted.
All right, David, Bloomberg MLive strategist David Savage, thank you very much. Have a great weekend. And still ahead on Daybreak Europe, a Bloomberg exclusive. OpenAI's chief revenue officer says that enterprise business is expected to make up 50% of total revenue by the end of the year. But first, drama for Starmer as speculation swirls about who'll step up to challenge him for the UK's top job. More on that next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, another potential challenge to UK Prime Minister Keir Starmer's leadership from one of the nation's most popular Labour Party politicians was enough to send the pound tumbling. Greater Manchester Mayor Andy Burnham said that he was seeking to run for Parliament, raising the prospect that he will eventually try to replace Starmer. For more, let's bring in Bloomberg's Alex Morgan in Downing Street. So, Alex, good morning. We've seen the pound reaction to Burnham taking this first step towards toppling Starmer. We're waiting for the gilt market reaction when it opens later. What hurdles, though, lie in Burnham's path from here?
Yeah, nearly 1% drop in the pound, just on the news that Burnham was looking to run for Parliament. Not that he's won a by-election, not that he's in Parliament, and not that he's going to launch a leadership challenge. And I think that tells you something about just how volatile the situation currently is, this political uncertainty. So what are his hurdles, Lizzie? Well, the first hurdle has been crossed. He has had a colleague, an MP, stand down in the Makerfield constituency, paving the way for this by-election, which Andy Burnham says he'll seek permission to stand in. The first bit of the puzzle then is in place. The second bit is getting permission to stand in the by-election. There could be other candidates. Burnham's last bid to stand in a by-election was blocked by the National Executive Committee of the Labour Party, which at the time was very much leaning in Starmer's direction. Now, the question we have is, will Starmer block it this time around? The indication has been he will not block Burnham from trying to fight that election. The second is, can Burnham win it? Reform, Nigel Farage's party, came second in that constituency in 2024. Burnham very much facing a challenge there. Third, if he does get into Parliament and a leadership contest hasn't been kicked off already, he would have to get 81 MPs behind him, Lizzie, to then formally challenge the Prime Minister. We are looking at weeks, if not months, of this playing out.
OK, and does the mayoralty of Manchester go reform? We will ask as well. But Alex, it's been a frantic few days of rumours and plotting in Westminster. You've been across it all for us. What's been the political and economic response?
Gosh, yeah, I mean, yeah, Lizzie, I mean, you've been across it too. You've been zipping to and from. I mean, that's what I think zipping around has been a great way of describing this, because yesterday we had the resignation of Wes Streeting, having expected it for days. He was the health secretary, but he stopped short of calling for a formal leadership challenge. So what you've had is 30-year yields, which are the most sensitive to the sort of long-term political instability, reaching their highest since 1998. And that's just around the uncertainty around Starmer's position. We're not yet in a formal leadership challenge. We're not yet at the point where we're seeing the party formally enter into this civil war. Already, though, we've mentioned the move on the pound. We've mentioned, obviously, the pressure on gilts there. It's already playing out, Lizzie, and we know the one thing the bond market was wanting was stability. What we've got here is more instability, and for weeks to come.
Yeah, do we see that 30-year yield heading for 6% this morning? We'll wait for 8 o'clock. Bloomberg's Alex Morgan for now. Thank you very much. Live from Downing Street. Well, coming up on Daybreak Europe, the Fed's Myron says that he will resign once Kevin Walsh is sworn in as the chair of the central bank, or maybe shortly before. We'll get you the details next. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until the midterm election.
hear it first on Bloomberg.
This desire to be number one is so somehow deeply ingrained into the human brain that's very hard to persuade the policymakers. Hey, step back and think, what is a better approach to take? China and US should step back and reflect whether it is in their larger long-term interests to engage in such a zero-sum contest.
And you can watch the full conversation between Kishore Mahbubani and Michelle Hussain on Bloomberg.com/videos, or listen wherever you get your podcasts. Well, sticking with China, the country's dominance in the supply of rare earths has been one of its key bargaining chips in global trade disputes. Bloomberg Originals has been looking at how the US is working to reduce its reliance on Beijing for these critical raw materials. Here's a preview.
It doesn't look like much, but this is the prize for the rest of the world in trying to catch up with China.
We need rare earths.
China owns them, processes them, refines them, and sells them. The entire supply chain is built around Beijing.
No matter what you do, you're always kind of beholden to China.
Rare earths are really the backbone of modern technology.
China's the ballgame. They're 80 to 90% of production and processing of rare earths that go into all equipment around the world.
And China's shown it will use that dominance as geopolitical leverage.
The main use of rare earths are in these powerful, high-performance magnets.
China's capacity for magnets is vast compared to the rest of the world.
When Donald Trump returned to the White House in 2025 and rebooted the US-China trade war, China responded with export controls on rare earths that expose just how much Western manufacturing still depends on China's supply.
The automotive industry came out and not so quietly said, we are going to have to shut down factories if we cannot get these permanent magnets.
That shock set off a broader scramble to build a new supply chain from mine to magnet.
This is a story about not letting one country hold all the chips on what is a very important supply chain.
All the chips, get it? And subscribers can get that documentary in full right now on the terminal or at Bloomberg.com. It'll also be available later on Bloomberg Original's social media channels. Now to some other top stories we're following for you this morning. Federal Reserve Governor Stephen Miron says that he'll resign once incoming Chair Kevin Warsh is sworn in or shortly before. The move was expected as Warsh will take Miron's seat on the Fed's Board of Governors. Miron says he supports Warsh's plans to overhaul Fed communications and balance sheet policy. He also says outgoing Chair Jerome Powell can assist in the transition.
Transitions are important. And I think that, it is maybe helpful to have someone there to give advice. But I still think it's important that it be a transition because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split.
Elsewhere, Cuba has run out of the fuel oil it needs to keep its power plants running as civil unrest begins to stir. Social media posts show sporadic protests breaking out amid a de facto US energy blockade of the communist-run nation. President Miguel Diaz-Canel blames the situation on the US energy blockade, which he says has imposed irrational tariffs on any nation that provides Cuba with energy. And California Governor Gavin Newsom is proposing a new tax on cloud-based software sales as the state turns to the technology sector for billions of dollars in new revenue. The plan would likely affect large software vendors and is expected to raise $1.1 billion in state and local tax revenue in the upcoming budget year. Coming up, we'll assess what progress has been made at the summit between Presidents Trump and Xi. Hetal Mehta, chief economist at St James's Place, will be joining us next. Stay with us. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks and bonds fall on inflation concerns after President Trump says the US doesn't need the Strait of Hormuz open. A working lunch, Presidents Trump and Xi are currently meeting in Beijing this hour, with both leaders touting progress on the second day of the summit. And in the UK, political uncertainty weighs on the pound as investors watch for the next moves on a potential leadership challenge to Prime Minister Keir Starmer. Well, a very good morning. Welcome to the programme. If you are just joining us, 6:30 a.m. here in London. And this is the picture in markets this morning. Right across the screen for the equities and futures picture, the MSCI Asia Pacific Index down nearly 2% as things stand. So that stock rally on the AI trade hitting a wall in the Asian session, it seems. Although the index is on track still for a sixth straight weekly advance, it's being particularly dragged down by the Kospi, the South Korean index. That's down more than 5% now, having touched the 8,000 milestone. So global funds reducing their positions in that stock market in particular. But as you can see, European and US futures also pointing south after that record close stateside yesterday. Now, if we flip over to the cross-asset picture, let's take a look at where oil is this morning. It's heading for a weekly advance with the Iran war still at an impasse. As I say, the Strait of Hormuz still effectively closed. President Trump saying he doesn't need it to be open. This morning, Brent now above $107 a barrel, up 1.3%. That pushing yields higher in the bond space, the 10-year now at 4.52 on the inflation concerns. And of course, we've got a keen eye on sterling, given the Starmer drama. Greater Manchester Mayor Andy Burnham taking the first step towards challenging the Prime Minister for the top job. We've been at a month low on cable. 133 is where we trade right now, down 0.3% just this morning. Time now, though, for your front page news. Let's start off with the Wall Street Journal, shall we? They're leading on US President Trump's state visit to Beijing. The paper saying that the second day of the summit is going to test whether the talks can actually yield a concrete deal. Lots of nice pictures so far, but will we see more substance? Now, speaking of deals, Les Echos out of France bashing on President Trump, saying Boeing secured 200 aircraft in China. One of the wins so far, but it did receive a lukewarm response from investors because it was below expectations, says the paper. Now, finally, UK Prime Minister Keir Starmer bracing for a leadership challenge by Andy Burnham. This on the front of the FT, the Greater Manchester Mayor saying that he wants to contest a by-election and return to Westminster. And we'll have full coverage of that from Downing Street throughout the day, but you can get a roundup of all these stories that you need to know to get your day going by looking at today's edition of the Daybreak newsletter, which terminal subscribers, as ever, can find by going to DAYB Go. Well, let's go back to the geopolitics now. President Trump saying that he discussed Iran with China's President Xi Jinping in Beijing, saying the countries feel very similar on wanting to end the conflict in the Middle East. Trump also said that he made, quote, fantastic trade deals with Xi Jinping, but offered few concrete details of what they entail.
This has been an incredible visit. I think we've made some fantastic trade deals, great for both countries. He's a man I respect greatly, become really a friend. We've known each other now 11 years, almost 12 years. It's a long time. And we've settled a lot of different problems that other people wouldn't have been able to settle.
Bloomberg's Min Min Lo joins us again from Beijing. Min Min, what are the main concrete achievements out of this trip, apart from all the lovely pictures we've been seeing of the two leaders?
Yeah, it's been described as heavy on symbolism and light on substance. In terms of concrete deal, we have the Boeing deal, a 200 jet deal, which was smaller than anticipated because previously there had been reports that Boeing was looking at a 500 jet deal. So not as significant as expected, but still quite a big game changer for the company after a near decade-long freeze in orders from China. No progress on soybean, but that was because according to Jamie Greer, this was already agreed upon in Busan. But Greer did say that China is committing to buy double-digit billions dollars worth of agricultural goods. So we are seeing corn futures, for example, rising on the back of that. What else we're seeing is beef as well. China renewing licenses for hundreds of US beef plants, which is a major win after those licenses were allowed to lapse last year on the back of this souring trade relationship, right? But at the same time, remember that Chinese beef producers are also grappling with overcapacity. They are going to feel the pinch if the floodgates are open to US beef imports. What is not discussed, though, according to Greer, tech curbs didn't really feature very much in the conversation. There was so much anticipation with Jensen Huang being the late addition to that delegation, right? We heard from Reuters that he reportedly got clearance to sell to about 10 Chinese firms, but Greer said that decision really is up to Beijing. And so far, China has not explicitly confirmed whether they're allowing their domestic companies to buy those H200 chips. Rare earths as well didn't feature in the readouts from both sides, but Jamie Greer also said that he would give a passing grade to China when it comes to the issuance of licenses, suggesting that there is some level of satisfaction from the US about the recovery of shipments on the rare earth front.
Min Min, thank you so much for your coverage this week. Bloomberg's Min Min Lo out of Beijing. Well, joining us for more analysis now is Hetal Mehta, Chief Economist over at St James's Place. Hetal, good morning. Thank you for joining us again. I want to start with this Trump-Xi summit, and we just had Min Min there laying out some of the achievements that have come out of it. I wonder whether any of them are going to lead to significant macro changes for both of these economies.
I think it's difficult to envisage a situation where we do see a meaningful macro change. The biggest, I think, positive outcome could be just a stability in US-China relations. that instability has actually obviously caused a lot of volatility in kind of wider policy making, and therefore in the kind of economic outcomes. The tariff wars from last year kind of feeding through into uncertainty around the situation in Taiwan. So I think it's difficult to kind of get to a point where there'll be some sort of grand bargain and big kind of policy announcement that moves the needle in the short term. But it's that stability in relations that I think will be probably the biggest positive signal that could come out of this.
And we got to talk about the UK. We were hearing from our reporter Alex Morgan over in Downing Street. We're waiting for the gilt market open this morning in response to Burnham taking the first step towards challenging Starmer. How much could a leadership battle in general weigh on the economy and weigh on gilts?
Well, I think on top of everything we're seeing with the energy situation pushing up yields, this is probably one of the other key drivers that is pushing up yields. The problems of low growth, high inflation for the UK, I think, are fairly entrenched, quite difficult to tackle. So even with a new leadership, those problems are the same. What we don't know at this stage is whether any of the potential successors have different solutions, and I guess that will come out over the course of the next few weeks and months. But it's a pretty entrenched problem, I think, and the fiscal situation in particular isn't looking any better now than it did a while ago. We've long said that it's quite a precarious situation. The tax burden is at record highs, so actually quite a difficult set of problems for anyone to inherit.
Well, yeah. Does that mean that Liz Truss had a point, that we're too constrained by the Office for Budget Responsibility? Does Andy Burnham have a point that perhaps we shouldn't be in hock to the bond market if we want to actually have some big ideas about how to achieve growth?
Well, I think there's a role, whether it's the OBR or something different, there is a role for having some kind of fiscal scrutiny. Obviously, a longer term horizon would certainly be helpful, being able to think about long-term investment that sits outside of the election cycle, but also out of the short-term economic fluctuations would clearly be beneficial. But the reality is that without some sort of independent assessment, we've seen that the bond market does react, and it's very difficult to therefore kind of understand what is the right risk premium that should be attached to UK government borrowing. So I think it would be very difficult for any leader, any chancellor to completely do away with that.
Well, given that bond vigilante reaction, do we really need to be that worried about a left-wing replacement for Keir Starmer, given that the bond market will be the guardrail, surely?
It may not be the bond market that we need to worry about, and then therefore, someone that has the inclination to spend more may not be such a bad thing if it was about long-term investment and could actually boost growth. The challenge that the UK has had is that a lot of the spending ends up being current spending, shorter term, and hasn't really boosted productivity. And if more spending means actually more taxes when the tax burden is already high, you probably start getting into a territory where you disincentivize economic activity, and then that becomes counterproductive.
OK, Hetal Mehta there, Chief Economist at St James's Place. Have a great weekend, Hetal. Thank you so much for coming on the early show with us. Well, meanwhile, Boeing shares have fallen after President Trump said that China agreed to buy 200 planes from the company, an announcement which fell short of the order of 600 aircraft that was reportedly considered by Chinese airlines. We get more on this now with Danny Lee, Bloomberg's Asia aviation and transport reporter. Morning, Danny. So Trump's pronouncement doesn't amount to anything confirmed by the Chinese side. If the numbers hold up, what does this signal relative to Boeing's position in China?
Good morning, Lizzie. So the numbers really differ between what Trump has been signaling and really whether he was talking about one part of a deal that may be announced by the Chinese. relative to, yes, a total potential of 600 aircraft that the market was expecting. And I think if we do fall short of the bigger number, it would be a disappointment overall because of the confidence that Boeing has been signaling as well in terms of to investors that there was a big deal in the offing. And it really begs the question of why we have fallen quite short. And even what Trump was saying, he spoke to Fox News overnight about there being some form of statement or commitment that China may make. That does seem to fall short of even a purchase commitment or even some form of MOU that China could sign up for. So it does remain to be seen, and we do really need to wait to see what the Chinese say once this trip is over, what exactly China might sign up for. So, but in the meantime, though, at least Boeing does have a really strong pipeline of orders from around the world, so it doesn't matter too much. But clearly, to really strengthen its position in the China market and to catch up after almost a decade of a lack of order activity, it can really help. China could really help its overall business.
And Danny, how important is the Chinese market to Boeing's turnaround strategy?
Well, Boeing has lost out over the past decade, particularly as we saw Boeing suffer those two fatal twin crashes with these Boeing 737 MAX jets. And at the time, China was the first to ground these aircraft. So therefore, Boeing lost a lot of ground to Airbus in particular. And so therefore, it will need to play catch up, and it's still lagging behind. But all of this momentum coming into this Trump trip really does solidify Boeing's position that it really will resume a lot of orders and a lot of activity in the key China market.
Danny, thank you so much. That's Bloomberg Asia Aviation and Transport reporter Danny Lee. Well, coming up, a Bloomberg exclusive as OpenAI's chief revenue officer says the firm's enterprise business has incredible momentum. That next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had these ingredients, never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. So a lot of good seafood, complete a different way. Example, they have the fresh fish. But Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with lemon juice. You never use soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make a novel style.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London. And I just want to mark how much the mood is souring in the futures picture this morning. Nasdaq futures now down 1.2%. And we're That's tracking Asian stocks lower. So the MSCI Pacific Index is down 2.3%. The KOSPI particularly dragging it down. That's now down 6.6%. And we've seen Treasury yields, meanwhile, rising. So the 2-year Treasury yield up 4 basis points at 4.06%. It's at its highest in 14 months. Really, investors worrying about inflation because Trump's been saying that the Strait of Hormuz doesn't need to reopen, and traders also questioning whether this AI rally has gone too far. Now, we've also got some breaking lines out of China. Of course, the Trump-Xi summit in its final hours here, but President Xi saying that consensus has been reached on stable economic and trade relations. So that line, the latest out of their meeting, as we were hearing from Min Lo, there's been a lot of good vibes, a lot of symbolism around this trip, but the substance has been wanting, you might say, in this visit. But this is the latest mood music out of Xi. He says that they're both going to expand practical cooperation across various fields, and the two sides have reached this important consensus, agreeing to stabilize trade relations and agreeing to enhance talks on regional issues as well. Of course, Taiwan, a key issue, a sticking point in this summit. Xi going out boldly when it comes to Taiwan, in particular US arms sales to Taiwan, given the leverage that the Chinese side went into this summit with when it comes to that Supreme Court ruling on tariffs and the US's reliance, this exposed reliance on rare earths. But these are the latest comments from President Xi as we reach the end of this meeting in Beijing. Well, turning back to tech now. OpenAI CRO Denise Dresser said that the company's enterprise business, which makes up about 40% of its total revenue, now has incredible momentum. Speaking exclusively to Bloomberg's Tom McKenzie, she said that it was expected to reach 50% of revenue by the end of the year.
As you use ChatGPT at home and you think about it for your personal life, then you want that same experience at work. And so today our enterprise business is 40% of our total revenue. It is growing. We expect it to be 50% by the end of the year, and there's incredible momentum.
And that 50-50 balance, you're comfortable with that? Or you want it to be lopsided more towards enterprise?
I think we want to meet both consumers and enterprises. And the focus is, especially right now, there's so much happening in the enterprise space. What we see is, I actually think we're at a tipping point in enterprise AI, because as these models advance so quickly and the innovation cycles continue to accelerate, there's this opportunity to bridge that innovation and the capability with how enterprises are thinking about adopting the capability. If you think about a couple of weeks ago, we launched GPT-5.5, which by all accounts is the most intelligent, the most intuitive, and also the most efficient model. But yet, when I'm here in Europe and actually across the globe, what I still hear from CEOs particularly is it's hard to keep up with the compounded innovation of what's happening now. And so I think the momentum, there's so much potential, really. There's kind of a vertical wall of demand in the enterprise that is left to be captured, and that's really exciting.
Does that momentum mean that you beat Anthropic on enterprise this year?
Well, what we're focused on right now is meeting the customers in where they are right now. And what I additionally hear from companies is just this transition between using AI as a productivity capability, and the real change now, Tom, is that what I hear from companies is they want to move beyond that. They want to move to bring intelligence into the complex workflows. This week, we announced a new company called the OpenAI Deployment Company. It was really designed to meet that moment, which is moving from productivity to true complex workflows requires a different operating model. So bringing a forward deployed engineer on site, working with a company so that you can understand their tools, their workflows, their systems, and then connect these models is really how you bring that true agentic capability into the enterprise. That's the real economic unlock, and we're excited about the OpenAI Deployment Company as a way to accelerate that.
What do you think investors and maybe some of your competitors miss in terms of the demand that you're seeing and your interaction with CIOs and CEOs? Is it the API use? Is it revenue per customer? Is it the contracts that you're signing around enterprise? What are investors and your competitors missing, do you think?
Well, I think what we hear from our customers, honestly, is they really love the breadth of our offering from OpenAI and the capability. For example, you can use the API, you can use ChatGPT. Codex is really having a moment right now, especially I think this is probably one thing that requires a little bit more emphasizing, but we've seen the weekly active users go from 2 million to 4 million in a matter of 30 days. And here in the UK and Germany, in fact, 9x and 10x respectively growth. 50% of that work in the UK is actually not coding, not the software development lifecycle, but knowledge work. And that is really the big opportunity, which is to transform the way the world works. And I think that's where we see so much momentum.
Does that pace of growth continue?
Yeah. Oh, I think it will accelerate. You know, the momentum around Codex right now is just accelerating through all regions. And this is the moment, actually, I think. And what I hear a lot from customers that work with us is they love, like I said, the breadth of the offering that we have, but also the way that we really lean in. We are a research and deployment company. The incredible research is on fire. The pace of acceleration can't be denied. But what we're also equally focused on is the deployment capability. And for us to bring the power of intelligence to everyone in the world and every person, we need to do both. We need to help bring the model, and we also need to help with the deployment and the adoption. And really what we hear from our customers is that is a differentiator for us in how we work with them.
OpenAI's Chief Revenue Officer Denise Dresser there speaking to Bloomberg's Tom McKenzie. Plenty more coming up. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It's snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, in our last couple of minutes together, I just want to end on this chart of treasuries, the 10-year yield crossing 4.5%. And this in response to the latest on the Iran war. Of course, we've got President Trump visiting President Xi in Beijing. Iran, one of the topics on the agenda. And President Trump saying we don't need the Strait of Hormuz open at all. And that's suggesting to some, nacho, not a chance Hormuz opens. So that worrying investors that this war could drag on and push up inflation, and that leading to this concern in bonds. It hit bonds first, perhaps, because we'd already been on a downward trend for treasuries, but now we're seeing the impact on equities as well. Just flip the board over and we can see where NASDAQ futures are right now. They've been in a more and more sour mood this morning. So down nearly 1.25% for NASDAQ futures at the moment. So the impact bleeding into equities as well. Traders questioning this AI rally if it's losing steam perhaps also. And if we just look at what's the latest coming out of China this hour, we've been hearing from President Xi in the last few minutes saying that the US and China are agreeing to stabilize trade relations. President Xi saying that consensus has been reached on stable economic and trade relations, that they should cherish the hard-won positive momentum that has been brought in this trip. So you're looking at Air Force One. President Trump will be departing Beijing today. Lots of pretty pictures out of this trip, but we do wonder about the substance that has been managed. Taiwan, a lingering question, of course, as well. Well, the opening trade is up next. Anna, Guy and Tom will take you all the way to the market open. Keep an eye on gilts with all of the Starmer drama. But have a great weekend. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. It's Friday, May the 15th. It's Friday, everybody. Here's what's on our agenda. Warm words in Beijing, but Trump spooked the oil markets. We watch gilts as Manchester's mayor plots a path back to Westminster. And global yields rise on higher for longer inflation fears.
Anna, I've only got 3. I could have 6. I could have 7. There are so many assets on the move this morning. I think it works kind of like this. President Trump says he doesn't care about the Straits of Hormuz. Brent rises. You then get a pickup into the US 10-year yield. We go through 4.5. Yield yields globally are rising. We'll talk about that in a moment. Equities then sell off in response to that. Take a look at NASDAQ futures. Take a look at what is happening here in Europe. Euro Stoxx 50 futures are down by 1.4. I think that's how the choreography works. But there's a lot of moving parts this morning. And certainly the risk rally that we've seen in places like Korea certainly feels like it could be under threat this morning. Anyway, really interesting trading to go into the weekend. The countdown to the opening trade starts right now.
We did discuss Iran. We feel very similar to Iran. We want that to end. We don't want them to have a nuclear weapon. We want the straits open. We're closing it now. They closed it, and we closed it on top of them. But we want the straits open, and we want them to get it ended.
So, President Trump, within the intimacy of Zhongnanhai, which is the leadership compound, I should say, in Beijing. It's not often that US presidents get inside Zhongnanhai. It's a hold them tight moment for Xi Jinping, with a stern message on Taiwan, a stern message on needing to have a framework for stability. And at least for now, Guy and Anna, no obvious signs of giveaways from China. Yes, we have a number on Boeing orders, but that's disappointed some. Yeah. No detail in terms of agricultural and commodity commitments. They may come through. We're still waiting for those headlines. That could well come through. We could see commitments on soybean purchases, on oil and gas purchases. But so far, we don't have that detail. But there is a clear framework now, at least from the Chinese side, and that's 3 years and beyond. We'll see if Xi Jinping commits to returning with a visit to the US in September. That would be significant in terms of building on the work that has been put in place. But I think the key takeaway from now is this relationship has stabilized. They've put in a framework, at least for now.
That's what the Chinese want, isn't it? The Chinese don't want the volatility of the Trump era. They're trying to contain the Trump administration and make sure that we don't see the kind of tariff volatility that we've seen in the past. Is that something that the Trump administration is going to be happy with? This has been a much tougher summit than I thought it was going to be. Everybody thought this was going to be kind of, we were going to see big deliverables coming out of this. The line about kind of Western decline, I think, is interesting. What has happened with Taiwan, I think, has been interesting. The Chinese are giving a tough line, but the overall framework they're trying to create is one that contains Trump. And these lines that we've just heard really speak to that.
Yes, it's really interesting, isn't it? As we watch these live pictures, President Trump's Air Force One, of course, getting ready to leave China as this summit comes to a close. I wonder if the full relevance of it is quite clear yet, because on face value, some of the lines look very warm and fuzzy and friendly, and you know, a lot of bonhomie between these two leaders. But on the other hand, as you say, Guy, there's a lot that is about containing. I mean, one on trade, she says that China and the US have agreed to stabilize trade relations, and if instability is one of your key policy tools and one of the levers that you like to pull, then yes, does this clip your wings?
Take a step back, and these are two powers now on equal footing, and that is the key difference, and that is the difference between previous presidential summits. China feels it, China knows it, and it can back it up. Two powers on an equal footing, and that's how they've communicated around these 2 days.
It's the line. Both sides should implement consensus reached.
But we don't know the details of what that is, yet, do we? I mean, it's possible there's still news lines to come out from this as the US team.
And it's really interesting. I think one of the papers this morning was talking about this. You've now got a September the 24th return visit away game for the Chinese.
If Xi Jinping accepts that,
if Xi Jinping accepts that. And what the Chinese will then do is within that period basically use that as an anchor point and say, you can't change anything between now and then. Basically, this is stasis now. Don't do anything on Taiwan arms. Don't do anything to upset the trade story. Basically, between now and then, the relationship is kind of frozen as is in terms of the consensus.
Is that market positive?
Possibly, yeah. In some ways, maybe you take the volatility out.
In the same way that this meeting was certainly something we were referencing as constraining people and their actions, particularly in the Middle East, ahead of it. So from 3D chess, perhaps, in China to 3D chess in the Labour Party and plotting ousting of the leader there. Let us talk about what's going on in UK politics, because the pound is weakened once again. It lost nearly 1% yesterday. It's down 0.4% against the US dollar. Now, we're waiting for the gilt market to open in 55 minutes' time. Andy Burnham, then dug by the press the King of the North, because he's seen as somebody who might have a chance of holding off reform. He has a plan to get his seat back in Parliament. So we go to another level in the bond market conversation and thinking about what he means fiscally, and we've had a few clues over recent months and years.
So I think it's really, the first thing I think to say is it's really hard to take out what is happening in the gilt market from what is happening globally in bonds. So I think we'll talk about bonds in just a moment. So I think you need to see it in the context of a bigger bond move that is taking place. If Burnham's the only guy that can beat Farage, he's got to beat Farage in South Wigan, which is where this is basically. So if he doesn't, then the Labour Party's a lame duck. And I think this is really dangerous territory for the Labour Party, therefore. If he does win and does beat the Reform candidate, and you talked about this yesterday, he's talking about tearing up the manifesto effectively. Can he do that without going back to the country? And therefore, you've got another test potentially coming. When do you get a general election? When will Burnham call a general election? October, possibly, definitely not kind of December. Or do we wait until next May? So that then heightens the risk around what he then needs to do.
So that's a potential sequencing as we get one piece of the puzzle put in place and the complexity of the moves ahead to get to that point. But that's a potential sequencing that the markets should be focusing on. I'm wondering if it's too myopic to think of Burnham as someone who is going to roil the markets with expansionary policy and not caring about the bond markets. This is someone who has, he's worked with Corbyn and he's worked with Brown, but he's also worked with Tony Blair as well. He is someone who adjusts.
He worked for the Treasury.
And he worked for the Treasury. He is someone who reshapes himself to the current political climate.
Chameleon.
There's a chameleon. There's a chance that he reshapes himself to the fiscal realities of the UK
and Bloomberg
as well.
Economics has done a deep dive on some of the things he said already, but of course he'll have a lot to say from here. But you put this in the context of what we're seeing in global bond markets, and that was certainly important yesterday because despite all of the domestic politics, we saw yields substantially lower in yesterday's session on gilts.
So I think you do need to think about what the UK is going through, but I think you can also view it as emblematic of some of the problems that we're seeing elsewhere around the world. In terms of what we're now getting, so you've got Japanese yields rocketing higher. Are we about to see a rate hike there? That feels increasingly likely. The US 10-year clearing 4.5. That feels like a major moment as well. Are we on track to 5%? 5% feels like a kind of press emergency button for markets globally. Equity markets have responded. And you've seen certainly NASDAQ futures rolling over. You've got futures here rolling over. You've got the Cosby under pressure as well.
Yeah.
So how close are we to the kind of moment where equity markets get really nervous about what is happening here?
Yeah, there's so many interesting dynamics here, and it is hard to know where all of this starts. But the oil story does seem to have added an extra dimension to it today with the President Trump, as you said, Guy, saying he doesn't care about the Straits of Hormuz being closed, although there were other things he also said. But it's at 107 right now. Another angle on this, another dimension, is the competition that govies are now facing from corporates. And we've got big tech trying to raise all this money, not just in the States, but globally. And you know, that's something that's being talked about in the Japanese markets. Alphabet had that big raise.
Alphabet raising
more than $3 billion.
the biggest non-Japanese raise in the Japanese markets. They've raised about 60 billion Alphabet over the last 4 months. There's a redhead across the terminal. Coming back to Guy's point on what's been happening in terms of the sell-off in JGBs. So Japan's 30-year yield rising to 4%. That's the first time since 1990. 9. And so the question is this the moment where the stock markets, as you look at the Kospi down 6.5% today, 6.5% drop for the Kospi, is this US futures, NASDAQ futures pointing lower, European futures pointing lower, is this the moment where the equity markets wake up to the concerns about inflation and higher yields?
You've got this gamma line as well, which is pushed on, and it needs to keep moving up if you aren't going to get a big reversal in terms of what the dealers are doing. So you wonder what market internal dynamics are also going to come into play here and how that's going to factor in. First time since 1999 on that 30-year, i.e. ever. That was when it debuted, so ever. Paul Skinner's going to be joining us very shortly from Wellington. We'll talk to him about all of this. Laurie Calvasina's on this side of the pond, RBC Capital Markets, US Equity Strategy Head. Looking forward to hearing what she has to say. And Charles Myers, Signum Global Advisors Chair, joining us later on in the programme, Tom.
Here's what else we are watching throughout the day then. Iranian and Russian officials attending the BRICS foreign ministers meeting in New Delhi. Jerome Powell's term as Fed chair ends officially today. Historic marker then, and US industrial production at 2:15 p.m. UK time, and the deadline for 13 FS filings as well, and we'll be unpacking the details of those for you.
What else do you need to know this morning? Cuba's government says the country has completely run out of diesel and fuel oil. It needs to keep these things to keep power plants running. Civil unrest is starting to break out amid de facto US energy blockade of the communist-run nation, with social media posts showing sporadic protests breaking out. The US has cut off the island from virtually all fuel imports since January, only letting a single Russian tanker through in late March. This is obviously a derivative of what happened in Venezuela. LVMH is selling Marc Jacobs, the brand, to WHP Global. Jacobs, the label's founder, will continue as creative director for the affordable luxury label. Those two things go hand in hand. The acquisition will push WHP Global's annual revenue to more than $9.5 billion. And Cerebras shares jumped 68% in their NASDAQ trading debut after raising $5.5 billion in the year's largest IPO. The surge gives the AI chip maker a market value of at least $67 billion. That puts its CEO and his stake at $3.2 billion. This according to the Bloomberg Billionaires Index.
Coming up on the programme, Gilt set to face pressure this morning after Manchester Mayor Andy Burnham opens a path to challenge Prime Minister Keir Starmer. We will have more on that shortly. Plus, OpenAI's Chief Revenue Officer has been speaking to Tom, says the company is seeing incredible momentum with its enterprise offerings. We will bring you more of that exclusive interview with Denise Dresser later in this programme. Up next, we'll be joined by Paul Skinner, Investment Director at Wellington Management. Lots to discuss: inflation, what to expect from the gilt market at the start of trade. Plenty on the agenda. IB plus BBTV Go is the function on the Bloomberg terminal if you want to get in touch with us and the opening trade team. This is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Friday morning, 44 minutes to go until the equity market starts trading. Could be an ugly one. That's the picture you see on the screen in front of you. Those are the European futures. Take a look at what's happening in Asia. A significant sell-off is taking place there. NASDAQ futures are down reasonably hard. Now, I say reasonably hard. Take a step back and look at what we've delivered over the last few weeks. So you just need to see that in the context of those gains. But we are maybe struggling a little bit this Friday morning to see the glass as being half full. Let's quickly talk about what is happening in the bond markets. This is the picture there. Again, this is really where the narrative lies. And as you can see, you've got pressure to the upside. You can see it in Japan, you can see it in the United States, and you can certainly see it here in Europe. The long end in particular is pushing higher. How worried should we be? The bond market is sniffing out inflation, sensing inflation. Paul Skinner, Wellington Management Investment Director, joining us to discuss. Good morning.
Morning, Guy. Good to see you.
Worried about the bond market?
Very. Yeah, I mean, there's
Very,
no question.
okay.
Yeah, no, there's no question that we are now entering a period of significant volatility. You know, we have a lot of pressure coming from the Straits of Hormuz on inflation, but we've also got a background where central banks have been a little bit easy on inflation for the past few years. So combination of a supply shock and embedded inflation is going to cause us.
What do you do?
I think the only solution is raising rates. Now, I think the ECB are showing their colors, and you know, they're quite clearly going to be raising rates. It's nailed on for June. That's the right way to go about it. You have to get this under control. And I think, you know, if we look to Japan, we can see how not to do it. You know, well, you know, they've got short-term rates at 0.75%, and their 30-year is at 4%. That's a huge steep yield curve. That costs a lot of money to fund. And it's because that Bank of Japan is very politicized. They had a cabinet minister sitting in on the last meeting. And as a result, they have not raised rates sufficiently quickly for the inflation issue they've got. Inflation's 2.5%. That's a negative real yield. That's immense. So, you know, if Japan is the role model, we're going to be looking at weak currencies for central banks like the Bank of England, who are on that extreme of being growth protectors rather than inflation fighters. The inflation fighters, the ECB, the Swiss National Bank, they're going to have an easier ride of this.
Yeah.
But the worry is if we let those yield curves go.
Is there so letting the yield curves go? Yes. And Jean-Claude Trichet was here recently, and he used to talk about having one needle in the compass. You know, it's just about inflation. That's the only thing that should matter. But it gets more complicated. The conversations talk about growth, and you know, at this kind of level of oil prices, you get demand destruction, and people are talking about weakness in the growth story out of Europe. How do you avoid those hikes being a policy mistake, or do you just have to face up to the fact that it'll be called that by somebody, and that's just how it is?
You have to face up to the fact. You have to take that step to reassure the markets. You know, that's essential, that if inflation surprises on an even higher side, you've at least done something. We've got, you know, a model from the 70s. In 74, we didn't raise rates sufficiently. That ended up in stagflation and a real crisis. 79, we'd learned from the central bank. We raised rates and it was all over and done much, much quicker. So the truth is, central banks have to, you know, bite the bullet, raise those rates, and things will normalize. The problem with you know, some of these countries, like the UK, is the fiscal story behind it. And, you know, we've got that whole political ramification that's happening in the UK that essentially says that the Labour Party is moving towards less fiscal responsibility. If we listen to that speech on Monday, Starmer, regardless of the leadership concept, has stated that, you know, the two things they're going to do is they're going to meet reform by moving to the heart of Europe. That'll differentiate them from reform. But they're also going to have no fiscal austerity on public services. Now, that means that budget that we had last year is simply not going to hold, because that encompassed some of the biggest departmental cuts since the World War II in 28 and 29. They're not going to happen now.
Okay, a lot we don't know about the UK fiscal position. Let's just get some input from what's happening in China. We have President Trump just arriving at the airport, ready to take off back to the United States via Alaska, I assume. But we've seen pictures of Air Force One, the team waiting for him I assume he's there. I assume
He is. That's
the beast.
That's the beast.
They ship the beast to Beijing.
Yeah.
He's in it. He's about to get out. You can see his security detail around the car, and then he'll walk up the steps. This is his second visit as a president in a presidential role.
Yes.
To Beijing Capital Airport. And
as we continue to watch those pictures, I mean, Paul, if we see central banks around the world putting up rates to take on inflation, that doesn't reopen the Strait of Hormuz. That is in the gift of the man we're seeing now getting onto Air Force One and the Iranians.
I think some of the disappointment is that that they didn't get any sort of deal regarding Iran from the Chinese.
They talked Iran, we understand, but
talked about it, yeah. And they talked about Taiwan. There was a hope that they could get some deal together. Now that's not happened, and I think what we've got to realize is the Iranian population are stronger than people think, and we're looking for somebody to back down. And at the moment, it's not going to be the Iranians. You've got to remember they have far more diversity in their economy than just oil.
Okay, as we watch President Trump getting ready to leave, let's get an update on where we've got to on the conversations in China, the relationship between the US and China. Min Lo is in Beijing with us and can take us through some of the key takeaways from the trip. Then, how do things look then on day 2?
Yeah, it's been a whirlwind 36 hours, right? And I think Tom was right in saying that one of the key, I think, win for China is the optics of this, the warm relationship and how US and China appears to be on equal footing here as President Xi hosted Trump to a visit to the Temple of Heaven and this morning to Zhongnanhai, the gated compound where President Xi himself lives and work. And not many global leaders have had the privilege to enter that area for the candid talk that they had over morning tea today and admiring those roses and trees that are over 100-year-old. But in terms of substance, that's a little bit wanting, right? In terms of actual deals, we have the 2Bs, Boeing, a 200-jet deal that was less than expected. Many people were expecting as much as 500 jets, so we saw the stock of Boeing fall on the back of that. But still quite a significant one, just given that it puts an end to a near decade-long freeze in orders from China. The last time we saw such a big deal was when President Trump last visited back in 2017. The other B, you have Boeing and you have beef. Yesterday, China renewing licenses for hundreds of beef plants in the US after allowing those licenses to lapse last year again. This is a big deal because last year we saw a collapse in those imports. But again, the environment here is such that we have these beef producers in China already grappling with overcapacity. So the actual volume of trade remains to be seen. The third B, soybeans, no forward movement on that because Jamieson Greer said that was already agreed upon in Busan last year. So no change on that front. And China is on track to meet those commitment of 25 million metric ton of soybean imports per year. He did say, though, that there will be a double-digit $1 billion worth of agricultural imports. What sort of agricultural goods? Not clear at this point, but we are seeing corn futures rising as a result. What didn't come through is tech. We have seen, all that news about Jensen Huang making that last-minute addition to that American delegation and a lot of anticipation about whether we would see a rollback of tech curbs or at least China agreeing to buy those H200 chips. Greer said that is going to be up to Beijing. Reuters said that apparently NVIDIA has gotten clearance to sell to up to 10 companies, but we haven't gotten the official confirmation from the Chinese side yet.
Okay, Bloomberg's China correspondent Min Lo, thank you very much indeed on that update. As we see, of course, and have been watching President Trump returning to Air Force One. He'll be traveling back via Alaska, of course, to the US after that 2-day state visit to China, of course, and Min talking about some of the announcements, Boeing and beef, but still waiting for details in terms of tech. That's really important, of course, and there's been a lot of speculation. And in fact, some stock moves on NVIDIA on the back of speculation that maybe the H200 would get that approval from the Chinese officials. As yet, as Min was saying, we have not had clarity on that. Let's bring Paul Skinner back in now, Wellington Management Investment Director. Paul, as we look through and past this summit then, is there a risk for global equity markets of an air pocket ahead of NVIDIA earnings between now and NVIDIA in the short term? What are you watching for when it comes to equity markets?
I think there's no question that momentum has been so aggressive on the upside that the risk of a correction is there. And, with a background of bond markets looking a little unsettled with the problem of inflation and the Straits of Hormuz not having a resolution out of that summit, I think there's definitely volatility to come. And, I think that when you get valuations as stretched and as concentrated in as few stocks, that correction can happen quite easily.
The focus here certainly is on what's happening with the politics and gilts. You've been talking about the BOE and your suggestion that maybe they're behind the curve in terms of addressing inflation here in the UK. What would gilts looking? When do gilts look attractive to you?
I think there's going to be a really exciting moment when the Bank of England finally get their conversion and they start to raise rates. I think there will be an incredible opportunity to lock in some of those long rates because inflation's not going to be with us for the very long term. Yeah. And, there is a great opportunity.
Do you have a number in mind?
Oh, that's really putting me on the spot.
Give me a number.
If we saw the 30-year get up above 6%, 6.25%, somewhere like that.
7?
I don't think you're going to get to 7. I mean, it would be a proper crisis if we got to 7. I would be a buyer, at 6.25%, above that level, sort of. I'd be very excited.
Where would that leave the 10-year?
Sorry?
That leaves the 10-year at what?
Well, I mean, the 10-year,
5.5?
Yeah, 5.5. I think that's comfortable. And what we've seen is there's immense retail buying in bond markets at that 5 to 5.5 level. So, there's a inherent belief that people get good value above 5% in fixed income markets, and they can lock that in for their retirement and feel very happy.
Nice to see you. Paul Skinner, Wellington Management, Investment Director. Coming up, we're going to have more on the political uncertainty in the United Kingdom. 3 senior Labour politicians consider challenging Keir Starmer for the top job. Laurent Van Bion, Senior Portfolio Manager at Allspring Global Investments, is going to be joining us. We'll talk fixed income a bit more. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning, how you doing? I'm just going to lean around Lizzie Burden. Half an hour to go until the start of trading here in Europe. I probably could have looked at the clock and figured that one out. Futures look a little bit like this right now. A lot of red across the screen around the world when it comes to equities. Bond markets are the real story, though, Anna. That is where the narrative is this morning. What are you seeing?
Absolutely. A volte fast from yesterday on the European bond space, because yesterday we saw yields in decline actually across Europe. But then since then, we've seen Treasury yields higher, Japanese yields higher. And today in Europe, we see yields higher. So we don't have the UK awake and playing yet. We wait another half hour for gilt markets to open. That will be a very interesting dynamic given what's been going on in UK politics. But for the moment, we've got France and Germany and Italy and Spain all up by 6 or more basis points at the 10-year horizon. So that's the focus for the bond markets. Now, let's dive into some of the UK politics. The pound tumbled after one of the UK's most popular Labour Party politicians moved to mount a potential challenge to Prime Minister Keir Starmer. Greater Manchester Mayor Andy Burnham says he's seeking to run for Parliament, raising the prospect that he will mount an effort to replace Keir Starmer. For more, let's bring in our UK correspondent Lizzie Burden, who's been following this story, of course. And this isn't a done deal, is it, Lizzie? Because he has to win a by-election, which is no small feat.
Yeah, far from a done deal. So he's got to, first of all, get the approval from the National Executive Committee. Starmer isn't going to stand in his way, we understand, as he did previously, and the seat went to the Greens. Then, as you say, he's got to win the seat. And this is something that Reform are going to throw the kitchen sink at. When this seat was contested in 2024, Labour won it by 45% of the vote. Reform won 32%, and it was the 6th highest vote share for them out of all of the seats. But if Burnham can beat Reform in a by-election, he can say he's the man to take on Farage at the general election. Still, though, it leaves the question of what happens to the mayoralty in Greater Manchester. And the pollster, Robert Hayward, saying Burnham could win the by-election, but Reform could win that, and it would take the likes of Gary Neville to keep it Labour in Greater Manchester. Then, sorry, but there are more steps. Then he needs the 81 MPs to support him to be in this leadership contest. And by the way, are Labour MPs going to have the patience to wait around for Burnham? But for all of those hurdles, he's the man who is leading in the Polymarket odds, and YouGov says he's the only senior UK politician to poll positively among voters.
What happens if he doesn't win, and what happens if he does win? So those are the. It feels really binary in terms of kind of two really distinct paths you could go down.
So I know your theory. Your theory, Guy Johnson, is that he'd have to, or he'd want to call a general election.
Depends how far he gets away from the manifesto.
Yeah.
But Starmer's manifesto.
But have you heard that joke that there was a Blairite, a Brownite, a Milibandite and a Corbynite walked into a bar and the bartender says, "What can I get you, Mr. Burnham?" I reckon, some reckon, he might be talking to the left as he tries to get the position of leader of the Labour Party, and perhaps he could pull to the centre once he's in that position. We saw it with Starmer.
No one's done
and
that
didn't go well, though. And that precisely, that didn't end, because he ended up getting nothing done because the left of the party was annoyed that he couldn't do social reform and all the other things.
But the problem that you're flagging is that there is potentially a gap between the rhetoric of Burnham right now and the manifesto as it stands. If he wants to keep this massive majority, which surely he would want to and need to, then he needs to steer closer to the manifesto, and this is the way to do it.
Or call a general election. Silence.
TBC.
Back to Guy Johnson's theory. Lizzie Burden, thank you very much indeed with the update on UK politics. Let's get some market analysis right now and bring in Lauren Van Billen, Senior Portfolio Manager at Allspring Global Investments. Lauren, thank you for joining us around the desk this morning. We're set for a brutal sell-off, it seems, in gilts today. Are you braced for that?
Oh, I mean, yesterday was going so well, wasn't it? Not just for gilts, but for everywhere. Today looks like it's going to be a much nastier day. And yes, UK is trading as a higher beta developed market. So if what we're seeing in Asia is anything to go by, it's going to be a bit of a messy start for gilts as well.
Do we just brace ourselves for significant volatility in the days and weeks ahead for the gilt markets? How should investors be thinking about taking any opportunity, about positioning in gilts at the front end, at the long end, inflation versus politics?
Yeah, that really is the question. It's been a volatile couple of months, right? We know, given the macro backdrop, given the oil price shock, global bonds, the rates market has been really noisy. Double-digit moves in either direction, multiple times a week, and I think we're in for that sort of that is the state of play. I think for the gilt market in particular, very long duration gilts have been a difficult buy for quite a while. That remains the case. But I think it's more interesting if you look at kind of the belly or the intermediate part of the curve, where you've got that interplay of sort of inflation versus that delayed growth downside risk, and more exposed to the sort of global wash, as it were, of pressure, whereas I think long end gilts will trade very much just on the political upheaval.
And, good morning to you, Lauren. The team at Bloomberg Economics has been combing through some of the things that Andy Burnham has said before about the economy and what he'd like to do. The thing everyone focuses on is not being in hock to the bond market. He said that was taken a bit out of context, and that actually he has he would have a wider suite of policies that would make the UK more investable. So, is it possible for them to make peace, Burnham and the gilt market? And I wonder this because he's talking about, somebody has to fund defence spending. Somebody has to fund a lot of things in the UK, just like in lots of other Western countries. It's difficult to know where the money comes from. So is there a way that the gilt markets can accept flexibility on fiscal rules?
It's always about degree, isn't it, of flexibility? What are you giving up in return? And what are you being paid to take on that extra spending? And certainly, I mean, gilt curves the whole yield curve is higher and flatter than it was. So you are being paid more. Are you being paid enough? Perhaps not quite clear. I think my hope for any Labour politician or any politician in general is that there's pragmatism, right? And just face the reality of what the market is telling you and what you can and can't do and what's open to you.
Yeah, I mean, could there be a path that involves changing fiscal rules, so having some rules, but they're just different to the ones that we have?
I mean, they are self-imposed.
Yeah.
So yes, there's no rule there.
They're not dictated by anybody other than politicians themselves.
Yeah, absolutely. Yeah, there's flexibility in theory. In practice, it could be a more delicate operation. But they're not fixed.
How high could UK 30-year go? UK 30-year, not the US 30-year. Like we were just hearing from Paul Skinner, he reckons you could get 6.5. Like, how much more upside is there in this yield move?
It's difficult to say because we're trying to piece together so many different bits and pieces. Is the Strait of Hormuz open or closed? Where's oil prices? Is there an upper limit
in where would you buy? Where would you be a willing buyer of UK?
Of a UK 30-year gilt? I think 6.5. Anything above 6.
Right.
It's especially, I suppose, where is that? How is that looking versus its developed market peers?
Sure.
If it's 6.5 and everywhere else is where they are right now, absolutely,
6.5
looks pretty attractive.
Yeah, looks pretty attractive.
If everything is 100 basis points higher, maybe the UK needs to be even higher than that.
Are bond markets going to force central banks around the world, including the Fed, to raise rates? Does it feel like that's the direction of travel at the moment? Usually, kind of the bond market tells the Fed what to do. And I'm wondering whether we're getting in that kind of space again.
I think for us, also this year is more about policy divergence. So I think the ECB, they will raise rates.
Okay.
Probably two rate hikes there. Maybe second half of the year. Our base case for the Fed is still that they cut, but maybe it's not until the fourth quarter.
How are you feeling about that?
There are certainly some risks to that forecast.
What's the logic? What's the logic for the cut?
I think part of our base case is that the energy price shock will start to dissipate over the next 2 months. It's that there is some solution there for the US and Iran, and it's sort of in the nearer term horizon. And I think if we see that, and we've got a labour market that's sort of stable to weakening, I think the Fed will lean for the labour market and kind of look through that sort of inflation shock. I think what's really key to watch is going to be core versus headline inflation, because the core, if that sort of core is still fairly well behaved or at least stable, then I think the Fed will cut.
Because the bond markets are suggesting convergence, not divergence, around central banks. BOJ will be compelled to hike. The BOE is set to hike on market readings and in the positioning. The ECB has already signalled that, to your point. And the Fed, given the metrics that we're seeing and the data, despite Kevin Walsh, it seems difficult to see how the Fed can cut in this environment when the economy is broadly ticking along, when unemployment is looking pretty healthy, the jobs market is looking relatively healthy. And we're starting to see that impact now, PPI and CPI.
Yeah, I mean, PPI, absolutely, because it's that input pricing, right? It's that supply side shock.
Yeah.
But if we're not seeing it carried through to the demand side, then I think the story changes. So something to watch, I think, for the next couple of months is going to be manufacturing versus services PMIs, and potentially telling that for Europe, services PMIs, mostly latest readings were not just below where they were outright below 50.
And what role does the Bank of England play then, either at the short end or along the, wherever on the curve? I mean, we heard from Pill at the Bank of England yesterday, and he's often quite hawkish, and he was sounding typically quite hawkish about inflation. But the Bank of England, it's often the inflation print is a little bit above the target.
Yes, exactly. And Q1 GDP, not a bad number. But interesting there, even to read the Bank of England's own theories that, that seasonality perhaps is changing, and it's that strong Q1 number, and then it's sort of doldrums for the rest of the year. I think the BOE would love to just not do anything this year, right? Just sit and watch and wait. And I'm not sure if the market's going to let them do it.
Get the popcorn. Watch number 10.
Exactly.
Watch what's happening.
Exactly. But when I look at pricing, if we're pricing in similar moves from the Bank of England to the ECB, that doesn't look quite right to me.
Lauren, thank you very much. Thanks so much for coming in this Friday. Lauren Van Billion, the Senior Portfolio Manager at Allspring Global Investments. Sticking with central banks, it's Jay Powell's last day as Fed Chair, and one governor is weighing in on Powell's plans to remain on the central bank's board.
Transitions are important, and I think that, it is maybe helpful to have someone there to give advice, but I still think it's important that it be a transition, because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split.
That was Stephen Myron, who will leave the Fed himself when incoming chair Kevin Warsh is sworn in. We'll have more on the challenges facing Warsh and the Fed. That's next. This is Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We are getting a real big supply
side shock into inflation in an economy that's already got very strong demand-led inflation. And I think that people are not fully registering how bad this could be later on this year.
Well, this takes time to filter into core goods. So exactly as he says, it's more, I wouldn't say we have to wait as far as 2027, actually. I'd say later on this year, you could start to see core goods inflation picking up because of these disruptions.
It has been growing, it's been festering. I think the Strait of Hormuz exacerbates it. You're going to have kind of upstream inputs into plastics, the diesel to transport things around.
The feeling we have is that if the Strait of Hormuz continues to be shut by June, we have the risk that they feel they have to do an insurance hike simply to avoid second round effect of energy prices feeding into the economy more broadly.
Gilt market worries do look at the data, the fact that the UK's inflation rate has averaged 3% since 2010. That doesn't sound like a lot, a 100 basis point delta to the 2% inflation target, but compound that over 15 years, there's an enhanced inflation premium.
The U.S., we've also seen that, where the bond markets are a little bit more concerned than the equity markets about what's going on in the Middle East and the impact on inflation. But basically, if you're bullish on the markets, what you're bullish on is AI.
Just a few of our guests and other Bloomberg contributors talking to the show this week, talking to the opening trade, discussing pressure on global bond markets amid higher oil prices and political uncertainty. Let's turn now to today's Markets in 3 Minutes on the opening trade with Paul Dobson, Bloomberg's executive editor for Asia markets. And Paul, we heard a host of voices there talking about various themes, but some of them coming back to the bond markets. And certainly today's focus for global markets seems to be about what is happening in the bond markets. Yields are higher. We see that now in Europe. We're waiting to see what happens with the gilt market when it opens. We can't move for headlines around what's going on the JGB market this morning. What are you seeing in global bond markets? How concerning does this look?
Yeah, good morning, Anna. I think in isolation, or if you're looking at it in the round, not that concerning at all. If you look at an index of returns on global bonds so far this year, it's about flat. It hasn't really gone anywhere. Corporate bonds have been performing strongly and shorter maturity bonds have been hanging in there okay, but it's the back end of the yield curve where all those problems are, and those are the bonds that are most susceptible to inflation, and those are rising all around the world, particularly today because we've got another push up in oil prices, which of course spills over into the inflation outlook. Plus, we had figures from Japan. The PPI numbers were extremely high. We had the US CPI data earlier in the week. That was also on the heavy side. So people starting to get worried about how elevated inflation is going to be, what central banks are going to need to do to keep that under control. And that's been causing losses at the back end of the yield curve and pushing up those long-term borrowing costs for governments and for corporations.
Paul, are equities down because yields are up, or is it the fact that we just had a great run?
I think that there's definitely a sense of both of those two things, Guy. You can certainly make an argument that a couple of the reasons why higher bond yields might be unfavorable to equities. One, people have been leaning into stocks for so long. Why would you want to own bonds? Maybe would be the flip side of that. But the higher yields mean higher borrowing costs, mean higher costs right across the economy. So that at some point does turn into more of a negative for the stock market. But I think that, we have had that good run. I think there's a little bit of disappointment in the air over the Trump-Xi meeting. I don't think that a great deal of positive takeaways for the market there. We still got the war going on in the Middle East. Okay, you might think that hasn't been such a big element, but it is definitely, still pushing up costs in the economy through those oil prices. No sign of resolution into another weekend here.
A strong day for the dollar, Paul. What's driving dollar strength today?
Yeah, so I think that it's all part of the same story, more or less. People like the dollar as a haven and a risk-off asset. People like the dollar with higher oil prices because the US is a net producer. And people like higher treasury yields as another sign of sort of a tailwind for the dollar as well. So the market has moved more in favor of the idea that the Fed is going to be hiking interest rates at some point, and rather than cutting interest rates, because it's going to have to because of those inflationary risks in the economy. So that's pushed up the short-term yields and it's pushed up the money markets as well. Spills back over into the dollar on a relative yield basis. people find it a little bit more attractive. But I think that, on the flip side of that, look at the biggest decliners in the currency market. It's all of those commodity currencies like the Australian dollar, South African rand that had such a good run as well. So that's getting a little bit of a puncturing as people take some risk off the table into the weekend.
Paul, thank you. Have a great weekend. Paul Dobson, Bloomberg's executive editor for Asia markets. Let's bring in Chloe Mellet now for a check on your stocks to watch this Friday. Chloe.
Good morning, Tom. LVMH is going to be in focus this morning. It is selling Marc Jacobs to WHP Global. And so for LVMH, this is part of a strategy of moving away from those more accessible luxury names and refocusing on higher end labels like Louis Vuitton, for example. And this really also is a way to capitalize on a years-long turnaround of Marc Jacobs. That could also pave the way towards more disposals, more divestments for LVMH, which has been operating in quite a difficult consumer environment lately. We've seen the shares really have this fall from grace over the course of the last few months. But the news of this deal, that might actually provide a much needed boost for that stock. Moving on, but staying within luxury, and we've got Salvatore Ferragamo, which makes luxury footwear. And there they had sales that disappointed analysts with a lot of weakness actually in Europe and in Asia, but then a little bit of more of a resilient performance in North America. And so that could weigh on the shares after quite a mixed performance. And analysts are saying that a return to profitable growth this year looks quite precarious because of the work needed on wholesale exits, decline in China, and also a difficult start in Europe because of those lower tourist flows that have affected other names in that sector. And finally, we're also going to be looking at Stellantis, which is going to be making Jeeps in China with the Chinese company Dongfeng. So this is a deepening of a relationship that has been rekindled just very recently, and that this could boost the shares for Stellantis. As we can see here, it's been having a very tough year, down almost 30%. We had this huge drop around February. The earnings have not been received very well, but the strengthening of those ties with China, that could potentially provide a boost for Stellantis this morning.
Chloe, thank you very much. Chloe Melly with some stocks in focus. We'll throw into the mix Nokia. This because the Finnish market was closed yesterday, but a couple of days ago, middle of the week, we got those numbers out of Cisco. Cisco.
Cisco.
Yes, it was Cisco. I can't remember 2 days ago, clearly. Cisco really flying. 19% it was, wasn't it, up after hours, and then up really strongly in session. And so is there read across into others who operate in a similar related space? Pivoting towards AI seems to be something that is good for companies these days.
Are we watching ASML this morning?
We can watch ASML. Nvidia's performed very well as well. So the read across from ASML because of what's been happening again in some of the providers to the chip giants over in South Korea. And so you had a bit of upside there.
Was it AMAT last night?
Yes. So exactly. Applied Materials gaining at least after hours on the back of that number in terms of what they're supplying, particularly into Samsung and SK Hynix. The Korean market is falling pretty significantly today, but within the context of those gains, of course. So there could be some read across to SML, also, of course, supplying into those foundries. Nvidia's up about 20% in the last 7 days. They're closing in on a $6 trillion market cap.
Yeah. So I think Nvidia's added more than RTX is worth. RTX, huge kind of industrial giants, in terms of market cap over the last few days.
Yeah,
just kind of a sense of scale.
And in terms of when those gains happened, it wasn't all around the Trump-Xi meeting, but there did seem to be quite a lot of expectation about, especially as he hitched a ride from Alaska, there did seem to be a lot of expectation about maybe there was going to be a big announcement of an ability to sell into China. And despite some, low-level news lines around what was going on there, that we don't have that kind of big picture deal on chips or H200 wholesale being allowed by the Chinese into China. And so Nvidia doesn't count on any China sales of H200, does it? But it might have to stay that way.
Ford is partly a China story now. Have you seen the chart for Ford? I think we've got it over 2 days. 20%, almost 20% gain for Ford, a maker of cars, because this is supplying energy solutions to data centers. An analyst put out a note, but the IP comes from China. The IP comes from CATL or CATL, that electric vehicle battery maker, and Ford are licensing this IP and this tech.
Are we in the crazy phase now where anything kind of with
anything
this
that touches
to
AI
is have we been there for a while?
Is that a signal?
The Ford maybe a bit of a signal. I don't know.
Yeah, well, the CEO was talking about de-risking the reliance on autos, which is exactly what you think about when you think of Ford. But no, now they're going to be into large energy cell production thanks to that China connection. And maybe it was appropriate that this news dropped this week, given the US and China relationship.
Ford was obviously one of the big stocks in the 1920s.
Yes.
Takes you back there,
yes,
just in terms of that narrative.
Thanks for that historical
Can't
perspective. Guy, thank you. Coming up, it is the open, of course. Brace yourselves for potentially some brutal selling in the gilt markets. Energy is a story, inflation is a story, but the politics as well. European futures pointing lower by 1.2%. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovations.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Morning, how you doing? A couple of minutes to go until the Friday session gets underway here in Europe. That's where Europe went out in the US session yesterday. That has nothing to do with what's about to happen in terms of the equity session that we are about to see. We basically went sideways. What is going to have an impact on the equity session that we're about to see is what is happening in global bond markets this morning, where yields are charging higher. Before I hand over to Tom as well, I just want to say Ford, not listed in the 1920s, did have something to do with the 1920s, though. Tom.
Oil above, Brent above 107 right now, to your point on the inflation risks and that bond sell-off that we're seeing globally. Just look at JGBs, just look at what's happening in terms of European sovereign debt, treasuries as well. Yields up, the dollar is getting a lift, bonds are down, oil around 107 on Brent, and WTI comfortably above, or less comfortably above, $100 a barrel right now. European futures then, there's some nervousness here, pointing up by 1% right now. FTSE 100 futures with the overlay of political risk in the UK as well, pointing low by 65 points, down 0.6%. DAX futures looking to lose potentially 267 points right now, pointing low by a little over 1%, Anna.
Okay, let's talk about some individual companies and indeed sectors that could be in focus this morning. We'll keep an eye on everything tech related. A bit of disappointment perhaps on what's going on over in China. No headlines around chips, and so Nasdaq futures are a little bit weaker. But maybe some in the tech space get a boost from Applied Materials, the semis equipment company coming in with numbers that were better than expected overnight. So that's something we'll watch, the sort of interplay between those two dynamics around tech. LVMH is also in focus, an asset sale there. They're going to be selling Marc Jacobs, that label, to WHP Global. Marc Jacobs stays on as creative director at that affordable luxury label, out of interest. And Syensqo, which is a specialty chemicals business, will watch that company because some of their numbers beat estimates. Guy.
Okay, here we go. Time for the Friday session. Let's talk about some numbers. Let's show you what is going on. We're expecting a fairly weak opener this morning to be delivered by European equities. We are anticipating that we could be down by circa 0.9%, maybe a full percentage point on some of these markets this morning. The bond market is certainly unnerving the equity market this morning. You've seen that evidence out in Asia. That was the narrative there. You see Nasdaq futures in particular roll over stateside as well. So what are we going to get here in Europe? Europe didn't go up as much. Does it therefore go down as much? That is a question that maybe we need to ask ourselves this morning. The Danish market, I think, is closed today, so just be aware of that when you think about some of the big stocks that are going to be on the move as well. So the CAC's down by, let's call it 1%. The IBEX is down by a full 1%. The AEX in Amsterdam, let's see how tech trades there, down by 0.7%. The FTSE 100 is down by 0.6%. Overall, where does that take us? A stock 600 that is down by 0.8%, Tom. Sectors?
There's a bit of a tilt to the safety of telecoms. Currently, that is a sector that is up 0.4%. Just three sectors in positive territory, two now. Energy up 2%, of course, on the higher oil prices. So 0.4% gain coming through for telecoms, energy up 0.2. Every other sector in negative territory. Biggest losses coming through for basic resources. That was one of the biggest losers across your sectors yesterday as well. Silver is under pressure, copper as well. Basic resources currently down 2.7%. Banks also taking a hit, largely you would expect what's happening in the bond market. So banks as a sector down 1.6%. So basic resources, banks, real estate all facing some pretty significant selling right now. And just really one major sector in positive territory. That's telecoms, healthcare getting a bit of lift, up 0.7% as well. Less than 0.1%, I should say. Telecoms up 0.2. But that's the picture. Basic resources really taking it on the nose right now alongside banks and real estate.
Yeah, it seems the dollar impact weighing on commodities, and as a result, some of those commodities are weaker. Those prices are weaker, and so we see that sector underperform. Let's go to the gilt market because this is interesting. We now have the market. You know, to what extent? This is an open question. To what extent are we pricing in Andy Burnham and the potential for him to become leader of the Labour Party? There are many hurdles to get through before we get to that point. But UK 10-year yields up by 11 basis points. That's a chunky number. It's double digit. But I will just throw in that this falls into a market that is already worried about inflation. Yeah. Italian BTP yields are up by 7. So do you take the difference between those two as some sort of premium?
Is that what we're now? So the UK and the Italian bond markets are now
not the comparison that many would like, but this is a sort of yeah.
Well, the spread is there in terms of the UK 10-year at 5.51 versus BTPs at 3.84.
Yeah, but I think Anna's point stands as much as the UK is up more than most this morning, but everything is up quite substantially. I think would be maybe the takeaway.
Yeah, absolutely. So still perhaps a long way to go. Timing's still unclear on the UK political narrative. We'll get more of that, more of an update on that as we go through the programme. This is a market, though, that is digesting. This is an equity market session that is digesting higher yields around the globe. Let's bring into the conversation Laurie Calvasino, RBC Capital Markets US Equity Strategy Head, who is here in London. Really nice to see you, Laurie. Thank you for being with us today. How resilient do you think the US equity story is to a higher yield environment? Give us your take.
So look, higher interest rates, you know, whether it's Fed funds or 10-year yields, they tend to depress PE multiples. So that's something you have to take into account when you're thinking about a forecast. And I'll give you a sense of our latest numbers. Last week, we inched up our S&P 500 forecast, which is a 12-month number, not a December 31st number. We had been at 7,750. We took it up to 7,900. And the 7,900 was really derived from a valuation valuation and earnings test, and we actually specifically bake into our PE calculation 4.5% on the 10-year yield. We've got a flat Fed, so we don't have any hikes or cuts coming, and then we've got 3.3% on inflation for CPI. And that's based on a stress test our economists did where they had it moving up much higher this year. This is all pegging off to 1Q27. And it's interesting. So the math we came up with was 79.29. That's based on earnings of 329, which is about a 5% haircut to consensus. And I apologize for all the math. I know it's early.
All right, just keeping up.
But what I would tell you is when I just take that PE assumption and I swap in 3.8 on inflation and I add a couple of hikes in and I take 10-year yields up to 5%, I lop off almost 2 points on the projected multiple. If I use the same earnings, I take the projected forecast for fair value from 7,900 down to around 7,400. Now, if I were to just take earnings down by 5% year over year instead of just taking the consensus down 5%, that would get you to 6,300. So that math really just goes to show you it is the earnings story in the U.S. that props the numbers up, that gives you a decent forecast. Interest rates, the pressure on PEs, that is a headwind to work through.
Okay, so it sounds as if you're saying, and correct me if I'm wrong, Laurie, that your stance on stocks, you're positive on US stocks, and it's resilient to some degree to a higher interest rate environment, certainly 4.5% 10-year, maybe even more. But it does rely on those earnings forecasts.
Exactly.
And what if those earnings are then threatened by a higher interest rate? Because we've got a lot of companies spending a lot of money, which is going to be costing them something.
Well, look, if you look at net debt over time, it has come down for the S&P 500. And what we also have seen in recent years is that companies have really pivoted more to long-term debt and away from variable and short-term debt. So I would argue that sort of the profitability of the S&P 500 is just less susceptible to moves in the 10-year yield than it has been in the past. The other thing that's important to understand about the resiliency of earnings. Now, when I mentioned that 329 number, that's a 1Q27 trailing 4Q consensus number. We basically went in and looked at the consensus, which has about 28% growth for AI-focused stocks, and we left that alone. And we went in and we looked at the market ex-AI, and we actually haircut those numbers, took the growth down from about 14% to 6%. So, and we're still coming up with a pretty decent number overall in terms of earnings growth for the S&P. So what I would tell you is there's just an inherent resilient bucket with that AI story that gets less caught up in some of these cyclical issues.
Okay. It's a lot to unpack.
It's a lot of math. I'm sorry.
Yeah, it's okay. I think I kept up.
There's more math in my meeting, so you're getting off easy.
Excellent. I'll stay here. How much of the Q1 earnings season, which was spectacular, was driven by what is a huge splurge by the hyperscalers and a deficit the government is running, which is off the scale for peacetime? We are running a massive deficit in the States. And I'm wondering what happens when that fiscal impulse starts to fade in the U.S. economy.
So look, if you look at the industrial sector, it has been expensive forever. And I have been having conversations with U.S. equity investors, small, mid, and large, growth and value, all varieties. Everybody loves industrials in the U.S. Even my international clients love U.S. industrials. And I have been hearing about, the E is understated because the earnings power is massive because of all these things that Biden did. Infrastructure Act, the IRA, the horribly named IRA, the CHIPS Act, and now we've got the one big beautiful bill. So there has been one stimulus measure after another under both parties. And I have just had investors willing to overlook that in the industrial sector, despite my warnings that it's looking a bit overvalued. Now, what I would tell you, if you zoom back to sort of 1Q earnings, we have this one chart in our deck where, and this is simpler math, so this one will be a little bit easier.
Thank you.
But it's just a little grid. And we basically look since the beginning of April, before reporting season started, changes in 2026 earnings growth forecasts on the consensus. And then we look and also try to track sectors that have better growth projected than the S&P. It's not just tech. We've also got materials in there, and we've got energy in there. And energy is the one that's actually farthest out on the grid. So those are smaller in comparison, but you do have those commodity inflation-driven sectors that are contributing, to this move a little bit as well.
Do you have a line? Do you have a line? Do people have a line in the sand? Your clients have a line in the sand. You get to 5% on a US 10-year.
5% is a number that just seems to spook people.
I don't know why, but
so we've looked into this in the past, and if you do a really long-term bond yield chart, and hopefully I'm not going to make my rate strategist mad, but if you just zoom out and look at a really long-term chart on 10-year yields, what you see is that if you go above 5%, my chart is no longer going to look like we're in sort of a stable interest rate environment that's kind of re-rated off the lows of post-GFC. It's going to be more of like a structurally rising rate environment. And I'll be honest, I'm just imagining this, but I think about all my analysts who cover stocks and have their Excel models, and they put in GDP assumptions and inflation assumptions, all their little macro assumptions. And I think they're going to not be too happy if we hit a 5% handle, right? Because they're going to have to dramatically change a lot of those assumptions. That's what I think is really going on.
5%. But you earlier said that 5% you'd be at 7.4, which is essentially where we are now on the S&P 500.
Yeah, if you look at the AI related stocks, and when we look at tech specifically, we haven't done it for this AI basket exactly, but I do think this probably applies to the broader theme. You can look at the top 10 market cap names in the S&P, which is like Mag 7 plus. They really don't have balance sheets, right? If you look at net debt to cap, it's kind of like hovering around zero. So I do think there is some inherent inoculation against that interest rate move in this massive part of the market, from these interest rates moves. That's something that hits more of those kind of cyclical areas, in my opinion.
I'm going to stick to the simple math. 725 billion is the commitment at the upper end for this year in terms of the capex spent from the hyperscalers. If we get a sense that the hyperscalers are starting to slow that commitment down, how does that change your strategy, your view?
You're not going to be able to look at it at that issue just in isolation. And what I mean by that is if you look at the top 10 market cap names again in the S&P 500 and you look at their year-over-year capex growth rates, and we have this data for 4Q, we don't have it for 1Q yet, but we were essentially, sort of hitting peak rates of change, right? Maybe not exactly, but if you kind of zoom out on a 20, 30-year chart, you're looking pretty toppy. Well, we took that data, we looked at it for the S&P broadly, and we looked at it for the S&P X, those top 10 names. We looked at it for Russell 2000, Russell Midcap. Everything besides that top 10 market cap cohort in the S&P is in the very early stages of a capex recovery. So the one big beautiful bill, right, was designed to incent reshoring. I'm not an expert on the tax law, but my sense is that it didn't necessarily limit what you can spend the money on. I may be wrong on that. But what we are starting to see is those numbers creep up. So as I look at maybe, these extreme levels of capex spend in the top 10 market cap names, sure, I can make a case for hovering, slipping a little, slowing a little, just because the numbers are already so large. But what I'm really curious to see is if the rest of the market has a catch-up capex cycle. And you look at things like ISM manufacturing, now above 50 for several months in a row. ISM new orders have been perking up finally. That story has gotten completely lost with all the noise around the war, all the hype on AI and other things. I don't know if it's reshoring necessarily. It is the ISM new orders numbers are picking up. Our economists have said, there have been some tariff-related, issues baked in this. I don't know exactly what it is, but the indicators are healthy.
That's the really interesting question. How much of this stuff is coming in? Like how much are you having to import? And also how much is the AI data center build out offsetting construction elsewhere? Is it, are the two things balancing themselves out?
Right. And so, how far does the AI impulse go through the US economy is also something I find really interesting, Laurie. And you have a focus on small caps. You like them, but not as much as the big caps. Because I think how far the AI story gets into small caps tells us something really important about what this technology can deliver on productivity and the rest. So how far does that AI impulse go for you?
So if you think about, sort of the Russell 2000, it just doesn't have these same big chunky names that the S&P 500 has. I'm sure if I spent enough time with my small cap portfolio managers, they could tell me this story or that story benefits from AI. I don't tend to dig down into the single stock level as much anymore. But what we do know, I think it was Duke CFO survey did some work last year, and they were looking at, it wasn't small cap, large cap, but it was larger firms, smaller firms. And on some of the AI related questions, it basically showed the larger firms were right at an advantage. They were engaging more, they were doing more. I think what's interesting about the AI story right now, and this could eventually filter into small cap, is that if you put the tech companies aside, put the picks and shovels aside, look at the retailers, look at the banks, look at all, the industrial companies, all these people that could potentially use AI. They're starting to have some decent use cases. A year and a half ago, we were just reading about chatbots, and I wanted to throw my laptop out the window because it was just so annoying. I don't like chatbots. But, we're starting to see, retailers or apparel companies, talk about design iteration in fashion. We're seeing, some companies talk about specific numbers around efficiencies on things like distribution centers. Some of the market data providers, who I know market data, right? But they're talking about the innovation process. forecasts on their earnings calls as well. And you have to assume that some of that will filter, into small caps as well. That's still a very early story. I don't think it's really adding much to the bottom line yet, but it's really interesting to read about. And I think it's really getting overlooked by this market.
Laurie, it's nice to see you. I'm going to bring a calculator next time.
Okay.
Next time you come.
I can't.
We can put one on screen.
I'll bring my marketing deck next time, and we can just
really frightened me.
A whiteboard and a
But we get to talk to you and not a chatbot that represents you. So that's
I hope it stays that way.
Don't we all? Laurie, nice to see you. Thanks for stopping by. I really appreciate it. Laurie Calvasina, RBC Capital Markets US Equity Strategy Head. Quick look at the core six. Denmark is closed today, so we've taken over Nordisk Off and replaced it with Barclays. Banks are under a little bit of pressure, understandably, particularly UK banks, given what is happening in the gilt market this morning. Marc Jacobs is to be sold. Defence stocks, maybe that's a place to hide out this morning. It certainly looks like it. But ASML is the standout story to me this morning. AMAT, interesting overnight. But look at what is happening with tech this morning out of Asia into Europe, down and down hard. Let's get some more moves with Chloe Melly.
Good morning, guys. Syensqo is having a pretty good day today. This is a specialty chemicals company that serves a wide range of end markets, including agriculture and automotive. And it's having a good day because of very strong results with profit beating estimates. And it actually said that this quarter's profit would be the lowest for the rest of the year. So that means even further growth for that company, a very bright outlook because of strong volume, strong orders. And so we're seeing Syensqo up about 5% on the back of those strong earnings this morning. Moving on to the chip sector, which, as Guy was just mentioning, is seeing a little bit of weakness this morning. We had a very strong day yesterday on the back of Trump's visit to China, but then today it is feeling some of the impact of this weakness in equity markets across Asia, feeding through to that weakness here in Europe with ASML, ASM, all of those chip names in the red this morning. Moving on to Stellantis, which is in the green. It is up this morning, slightly up about 1% after saying that it will be making Jeeps in China with Dongfeng. So this is a strengthening of an existing relationship which has been recently rekindled. And so this strengthening of ties with China as part of Stellantis' turnaround is seen as quite positive. And so we're up a little bit this morning. And finally, it's a supermarket chain, Dino Polska, is up very strongly this morning, about 14%. The margin beat expectations. Analysts are saying that competitive pressures have now eased, they've peaked. There's still the threat potentially of food inflation looming on the horizon. But for now, the earnings are looking very strong. The results are strong. And therefore, we are seeing that reflected in a very strong performance for that stock this morning.
Chloe, thank you. Chloe Melly with Stocks in Focus. We've got gilts in focus. So the gilt market, we are seeing yields up by 11 basis points on the 10-year. Last time I was comparing it to Italy, and it's 3 basis points more than Italy. If I'm less generous to the UK, it's around 5 basis points more than Germany.
Take a quick look at the pound, see what's happening there. What is sterling doing? Sterling had an advanced run yesterday at the Burnham story, which we didn't necessarily get from some of the other asset classes. And as you see, the British pound under a little bit of pressure, but the dollar is on the front foot this morning.
Okay, coming up, a Bloomberg exclusive as OpenAI's chief revenue officer says the firm's enterprise business has, quote, incredible momentum. That is next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. This is the opening trade, 20 past 8, 20 minutes into the European session. It is a feature of today's global environment that we have higher yields, and that is being factored into these markets. We see real estate on the back foot. Technology also a bit disappointed perhaps by what happened in China. So tech is down by 2%, basic resources down by 3%. Tom, a little bit of nervousness around the tech space as we look at NASDAQ futures to the downside.
Yeah, and on tech, let's get a bit more detail in terms of OpenAI and its aspirations, because that company's CFO, Sarah Fryer, says the company may raise more capital, even after completing what she described as the largest private fundraising round ever, as the company races to secure computing power to meet surging AI demand.
The private markets have been incredibly generous to us, much bigger to tap than I think most people ever thought possible. I mean, 122 billion is literally the largest private fundraise ever. But there is something attractive about the public markets over time too, because it's not just about equity, right? We want to be able to, over the long run, raise money across the whole spectrum. And the public markets are significantly bigger than the private markets.
I also caught up with the Chief Revenue Officer, Denise Dresser of OpenAI, who says the ChatGPT maker's enterprise business, which makes up 40% of its total revenue, now has, quote, incredible momentum.
As you use ChatGPT at home and you think about it for your personal life, then you want that same experience at work. And so today our enterprise business is 40% of our total revenue. It is growing. We expect it to be 50% by the end of the year, and there's incredible momentum.
And that 50-50 balance, you're comfortable with that? Or you want it to be lopsided more towards enterprise?
I think we want to meet both consumers and enterprises. And the focus is, especially right now, there's so much happening in the enterprise space. What we see is, I actually think we're at a tipping point in enterprise AI, because as these models advance so quickly and the innovation cycles continue to accelerate, there's this opportunity to bridge that innovation and the capability with how enterprises are thinking about adopting the capability. If you think about a couple of weeks ago, we launched GPT-5.5, which by all accounts is the most intelligent, the most intuitive, and also the most efficient model. But yet, when I'm here in Europe and actually across the globe, what I still hear from CEOs particularly is it's hard to keep up with the compounded innovation of what's happening now. And so I think the momentum, there's so much potential, really. There's kind of a vertical wall of demand in the enterprise that is left to be captured, and that's really exciting.
Does that momentum mean that you beat Anthropic on enterprise this year?
Well, what we're focused on right now is meeting the customers in where they are right now. And what I additionally hear from companies is just this transition between using AI as a productivity capability, and the real change now, Tom, is that what I hear from companies is they want to move beyond that. They want to move to bring intelligence into the complex workflows. This week, we announced a new company called the OpenAI Deployment Company. It was really designed to meet that moment, which is moving from productivity to true complex workflows requires a different operating model. So bringing a forward deployed engineer on site, working with a company so that you can understand their tools, their workflows, their systems, and then connect these models is really how you bring that true agentic capability into the enterprise. That's the real economic unlock. And we're excited about the OpenAI deployment company as a way to accelerate that.
What do you think investors and maybe some of your competitors miss in terms of the demand that you're seeing and your interaction with CIOs and CEOs? Is it the API use? Is it revenue per customer? Is it the contracts that you're signing around enterprise? What are investors and your competitors missing, do you think?
Well, I think what we hear from our customers, honestly, is they really love the breadth of our offering from OpenAI and the capability. For example, you can use the API, you can use ChatGPT. Codex is really having a moment right now, especially I think this is probably one thing that requires a little bit more emphasizing, but we've seen the weekly active users go from 2 million to 4 million in a matter of 30 days. And here in the UK and Germany, in fact, 9x and 10x respectively growth. 50% of that work in the UK is actually not coding, not the software development lifecycle, but knowledge work. And that is really the big opportunity, which is to transform the way the world works. And I think that's where we see so much momentum.
Does that pace of growth continue?
Yeah. Oh, I think it will accelerate. You know, the momentum around Codex right now is just accelerating through all regions. And this is the moment, actually, I think. And what I hear a lot from customers that work with us is they love, like I said, the breadth of the offering that we have, but also the way that we really lean in. We are a research and deployment company. The incredible research is on fire. The pace of acceleration can't be denied. But what we're also equally focused on is the deployment capability. And for us to bring the power of intelligence to everyone in the world and every person, we need to do both. We need to help bring the model, and we also need to help with the deployment and the adoption. And really what we hear from our customers is that is a differentiator for us in how we work with them.
OpenAI's Chief Revenue Officer, Denise Dresser, speaking to me about the demand for enterprise. It's interesting. There's a narrative out there that OpenAI has won the consumer, that Anthropic is winning on enterprise, and that Google is catching up on both fronts. And what OpenAI are really trying to make the point is enterprise is very important to them, and they are seeing that in the metrics. So 40% of the revenue now comes from enterprise. They see that going to 50% by the end of this year. They want to be serving both the consumer and the enterprise. Yeah. And interestingly, they talked a lot about agentic and that being a real pivot point in terms of the demand that comes through. There have been question marks about whether that demand was starting to slow. Yeah. They say actually that use of agentic is really starting to accelerate. And it ties back to what I think Laurie Calvasina was saying, which is that the markets, Laurie Calvasina was saying the market's underappreciating to what extent small caps now and smaller companies are starting to integrate and use AI and the potential upside that comes through from that.
If you want to monetize, you've got to go down that road though, don't you? And that's the challenge at the moment. Now, Anthropic has kind of shown the way. So in some ways they're playing catch up, aren't they?
They're trying to join that narrative, certainly, aren't they? Because that's the story. The story that the wider media has been telling has been around Anthropic in that particular part of the AI space. Coming up on the program, we will digest what we've heard from China this week. President Trump leaves China after his highly anticipated summit with Xi Jinping. Was it a success? We will discuss with Charles Myers, Signum Global Advisors Chairman and Founder. That conversation is next. This is Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session. Happy Friday. European stocks across the benchmark are down 0.6%. Investors having to wrestle with arguably a lack of catalysts out of the China-US meetings. Bond sell-off is there absolutely front and centre as well. And in terms of the UK, the politics, of course, and that uncertainty. The FTSE 100 currently down 58 points. The DAX over in Germany dropping 181 points. And over in France, the CAC current off by 0.6%. Guy, what are you looking at?
Let's look at the details of what is happening here. Remember that you've got the Danish market out, so the numbers don't quite tally, but volume is actually a little higher this morning, which I think is interesting as the market starts to become a little nervous about what is happening in the bond market, as Tom says. But net, we are a little lower, and you can see that in terms of the figures that you've got there. Let's break it down and talk about some winners and losers and give you an idea of what is happening here. Let's talk about Polish grocers. You would have thought grocery stocks would be actually reasonably well behaved, but actually they're not. Dino Polska is up by 13%, big beat this morning. I do also wonder whether or not there's a kind of safety trade involved here, but maybe I'm stretching that a little bit too far. Anyway, that stock certainly on the move. SAP, some news out of the States overnight, maybe providing a tailwind for SAP. We're up by 1.8%, and oil stocks are higher, understandably, given what we're seeing elsewhere. But that yield story comes into play when it comes to some of the property stocks here in Europe. Unibail Rodamco Westfield, you can just about see it, there's a lot of names, is down by 5.12% this morning. Yield plays are going to struggle as yields go higher. ASML is up, is down this morning. You would have thought actually overnight it might be up on the AMAT story, but it's not. It's down. We're down by 3.4%. Out of Asia, you've seen a lot of technology selling. That is translating into Europe. And UK banks, unsurprisingly, given the yield move we are seeing this morning, they are down. Barclays down by 2.2%.
Let's stick with that theme and get up to date on some of the other stories we're covering this morning. The cost of UK government debt jumps this morning as one of Keir Starmer's top rivals, Andy Burnham, prepares to run for Parliament, a process necessary for him to potentially topple the Prime Minister. The Manchester Mayor is the only senior UK politician to hold a net positive approval rating among voters, that is according to YouGov, and is the preferred candidate for many on the left of the Labour Party. LVMH is selling the Marc Jacobs brand to WHP Global. Jacobs, the label's founder, will continue as creative director for the affordable luxury label. The acquisition will push WHP Global's annual revenue to more than $9.5 billion. And the United Arab Emirates is building a new pipeline bypassing the Strait of Hormuz, with plans to have it in operation by 2027. According to the Emirates media office, the Abu Dhabi National Oil Company, that's ADNOC, will double its oil export capacity through the port of Fujairah once it completes the project. Guy.
Let's turn our attention to what has been happening kind of in a related story out in China there. President Donald Trump has wrapped up his visit to Beijing. Air Force One is currently on its way home. It was interesting in terms of what was delivered there, talking about maybe buying a little bit more American agricultural products, 200 Boeing aircraft. Not a lot, actually, in terms of what was anticipated. So expectations not maybe being delivered upon. Let's bring in Brendan Murray, who leads Bloomberg's global trade coverage. Let's talk about this summit. So the Americans like to famously contain their enemies, certainly in the sort of post-45 era. But it feels like China now wants to have a little bit of that playbook as well. It wants a volatility dampener on Trump. It wants to limit the oscillations we've seen in policy coming out. And that appeared to be the message that came out of this summit from the Chinese.
Yeah, exactly. Chinese state media came out with this phrase and called the new relationship a constructive, strategic, stable one. Doesn't sound like a title that was crafted by the China hawks in the Trump administration. I think what this reflects is that the relationship has been rebalanced in much more on the terms that China would like to see them. We will see how President Trump speaks to the media in the days to come about whether he sort of falls in line with this. But if you look at if you break it down this way, the personal relationship between the two leaders, you can both sides can claim a win there. President Xi scolded Trump on Taiwan, and President Trump got the sort of made-for-television pageantry that he likes. The substance, we still don't know. We still don't have a chips deal. We didn't really get anything on AI. There was very little discussion about critical minerals. We got the agriculture and the Boeing planes, but we got something less than half of what we thought the Boeing sales were going to be. And that, to a large degree, sounds to me like China saying, we'll buy 200, we'll see how it goes, and then we'll take it from there.
Okay, I was speculating at the beginning of the week, Brendan, or I was asking one of our correspondents in the region, are we going to get any more than headlines around soybeans? In the end, we didn't quite get a deal on more soybeans, did we? What's the agricultural story here? Yeah,
exactly. So soybeans, if you look at the soybean market yesterday, it fell pretty sharply, and I think that was the expectation in the marketplace that those were going to come up short. The beef export deal came through, but at the moment the U.S. has a severe shortage of beef, and do we really want to be shipping beef to China when the cost of ground beef is double what it was during Trump's first term? So there are some there might have been a bit of an own goal there domestically for President Trump to allow that beef arrangement to go forward, but all in all, the deliverables on the agricultural side weren't surprising, and if anything, came in less than expected.
Brendan, did we get anything on rare earths versus chips, which seem to be these kind of equally balanced pressure points from both sides?
We haven't heard anything officially from either side yet. That's not to say some of those might take longer. President Trump, as we all saw, brought a bunch of tech executives and industrialists along. So some of those still could be announced, but we didn't get anything immediately that either side could announce.
Brendan, thank you very much indeed. Bloomberg's trade czar, Brendan Murray, with the details and the context around that visit. And we may get additional details, of course, from both the US and Chinese sides now that President Trump is in the air heading towards Alaska. For more analysis, Charles Mayers, chairman and founder of Signum Global Advisors, joins us now. We want to get into Iran as well with you, and maybe your take on what's happening with Venezuela when we think about the energy markets. But let's start on China and the US. Was this a win for China?
I think it was a win for both sides. First, yes, China, as the host, probably got a little bit more of an advantage because President Trump did fly all the way to Beijing. Interestingly, President Trump's tone was a lot more deferential to President Xi than the other way around. I think there was a little bit of uncomfortability back in the U.S. and in Washington that Trump was so flat, so fawning, and so again, complimentary, deferential, and Xi was much more kind of like serious. His demeanor was more typical and serious. However, I think that there were some positives out of this summit. First, the two sides are talking. Second, we've agreed to continue to de-escalate on trade. Third, China will commit to buy more U.S. agriculture. We'll find out how much. The big news, the new news, was China's going to buy U.S. oil. That was new. That has come out of this. That had not been agreed before. They're going to buy some more Boeing planes that you mentioned. And I would say, very importantly, and this happens in all of these bilateral summits, and the fact that we took 20 of our top CEOs over, there's a lot of commercial deals that are being done with the private sector. Last quick point, the two sides are going to keep talking. President Xi comes to Washington in September. This is all good progress.
Do we assume stability then through September?
Yes, absolutely. I think we'll continue to see the bilateral both steady and improving on issues around trade.
But this is a geopolitical risk that the markets can put to one side for now, US-China.
Absolutely. And I think the language around Taiwan, which would have been one of the bigger geopolitical concerns going in and coming out, was a little bit harsher, a little bit stronger from and more threatening from China. But in no way did it suggest that anything is imminent or they're about to move on Taiwan. So I'd say on that big issue, it's status quo for now.
The Chinese want status quo. They want to get rid of the volatility that Trump sort of brings to the relationship. Do you think they succeeded in doing that in this trip? The language was all about trying to dampen down that volatility, trying to keep a stable relationship. You've now got this September meeting as well. Why would anything change between now and then? Is Trump being contained by China?
Well, partly. I think it's a little more nuanced than that. I would say that China, first and foremost, wants stability. They want stability around the world. They want stability in the relationship with the United States and directionally more positive developments on trade and other areas. And they also would like to see the war in Iran end, not anytime soon because they're the biggest winners. But ultimately, China is projecting, even through this bilateral meeting in Beijing, China's projecting to the world that they are the more stable and more reliable superpower, while the United States is at war in the Middle East and while we're still at war in Ukraine. So I think China's come out ahead of the summit looking much better and more stable. But the truth is the two sides and the overall bilateral is in a much better place than it's been in 20 years. The goal is to keep that going on trade, commercial deals, and geopolitically.
Why is China the biggest winner from the war in Iran?
They're the biggest winner because they can buy very heavily discounted Iranian oil. They buy 90% of Iran's oil. They can get it at a very big discount.
How do they get it?
There's other ways. It doesn't all come through the Strait of Hormuz. Secondly, the Chinese look like, again, a much more stable partner and a superpower. And thirdly, the United States is burning down or using up a lot more military hardware than we expected to fight this war in the Middle East, even taking some of that hardware out of the Indo-Pacific and moving it to the Gulf so that we can do what we think is going to happen, which is re-escalate in Iran. So on every level, China's the winner. And I think they ultimately would like the war to end at some point, but they're in no hurry. If they'd wanted the war to end, they could put enough pressure on Iran literally to get to the table and agree to reopen the strait today.
Charles, so you think that we will see a re-escalation now? So we for a while been thinking about this meeting coming up and thinking, well, maybe nothing very kinetic will happen in the run-up to it. But now the meeting is behind us. You do think then that we will have a return to military action? Will it be of a similar scale and scope as previously, or something much more contained?
So so just the first part, the answer is our base case is the United States will have to re-escalate militarily. Secondly, no, it will not be small and contained. It is going to be a major military operation, which most people are underestimating. It'll be a combination of, and on timing, if I can, just quickly to say, if we can't get to a deal with Iran in the next 3 or 4 days, 5 days, President Trump will realize what he already knows, that Iran is just stalling in the negotiations. The only way to get to a deal is Iran has to agree to reopen the strait unconditionally. The nuclear stuff we're punting into the future. If that doesn't happen, I always say, if you think that Iran's going to reopen the strait unconditionally, we have a deal. That's very good news. We don't believe that. So the military option is going to be a much bigger campaign on two fronts. The United States and Israel take the Strait of Hormuz militarily through a combination of air, naval, and personnel. At the same time, shock and awe across Tehran on military, government, and civilian infrastructure, as well as another wave of assassinations of the leadership, including the new Ayatollah. So the objective in this, if we go back in the next 2 to 3 weeks, which is our base case, is to decapitate the regime and find a group of generals that are willing to come to the table, be pragmatic, and reopen the strait.
Okay, so, I mean, it seems as if because last time we spoke was in March. Things were still very live. And at the time, there was a widely held view that this would not last very long because an off-ramp would be sought. And I think you shared that view, Charles. But things didn't quite play out that way, or it took a little bit longer for the kinetic activity to die down. Do you think there's a misunderstanding in Washington of the enemy here? Do you think people understand who they're up against and the motivations of that enemy as well?
Oh, absolutely. Look, in war, the biggest mistake you can make is to underestimate your opponent. And in this case, the United States, and Trump says this openly, really believed that Iran would capitulate in the first week. That obviously hasn't happened. And now we're 12 weeks into a war that I would argue the opponent, Iran, is even more powerful because they have a chokehold on the global oil market and therefore a chokehold on potentially on the global economy. This war has gone not to plan at all. It is off the rails. Trump needs a deal. Keep an eye on the 10-year yield. The 10-year yield's at 4.5. If it goes to 5, Trump will capitulate. He'll take any off-ramp, any language around reopening, even with a toll in the Strait of Hormuz. If price of oil goes to 120 and stays there for a week, he'll also capitulate.
Yeah. But I mean, last time you thought that 4.5 was key and the oil over 100 was key. Do you think is Washington having to reevaluate these sort of red lines?
Yes, absolutely. Because again, the war has gone so badly, and we're so far in that we actually have new. Trump keeps moving the goalposts on everything from what the forcing mechanisms for him to get to a deal are, but also he keeps moving the goalposts on what an actual agreement looks like. At first it was no nukes at all. Now it's like, all right, we'll punt the nuclear discussion into the future. Now it's only about reopening the strait, and we'll maybe give you some language around toll, but we're not sure. So the war's gone really badly. Trump needs a deal. Our midterms are coming up. Price of gasoline's at $4.55. And so one good thing on this, and not that there are many good things in war, but we will not be having this conversation a month from now. We will either have in the next 2 to 3 weeks a deal, the diplomatic off-ramp remains, or we're going in such size and we'll decapitate the regime. And it's going to be huge, but it will be short. So we're kind of in a crossroads. I'd say the next 2 to 3 days are the most important in terms of direction of this war, off-ramp or kinetic.
I thought I was going to have a quiet weekend.
Well, we're all going to be busy this weekend.
Again, Charles Myers, thank you very much indeed. Another busy weekend. How do we okay with this? Another busy weekend?
You look stressed, Guy.
Well, no, it's just
I think it's worse if you're in the region.
Yes, probably. No, that probably is true. Charles Myers, thank you very much indeed. Nice to see you. Coming up, pressure on gilts, the pound and the Prime Minister as speculation swirls around who will step up as challengers for the UK's top job. More on that next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to the opening trade. Happy Friday. We are 49 minutes into today's session. European markets are down across benchmark, down 0.8%. Here in the UK, the FTSE 100 has fallen 83 points, down 0.8% as well. Some heavier losses over in Germany. The DAX off by a full 1%. Yes, it is risk off in this session, and the bond market sell-off is certainly a factor for investors, Anna.
Yeah, let's have a look at where we are on the bond market story, because this is not just a UK story, but the UK is certainly looking pretty punchy. In terms of the, where are we there? There's the 2-year yield, the 10-year yield, 30-year yield. You can see they're all heading higher between 9 and 11 basis points across the curve. This comes amid the prospect of that the Prime Minister will have to fend off rivals for the UK's top job. For more, let's bring in our UK correspondent, Lizzie Burden, who is in Downing Street. So, Lizzie, talk us through where we are now. Where do things stand for Keir Starmer?
Well, no formal challenges yet, Anna, but the bond market can see where this is headed. The Greater Manchester Mayor, Andy Burnham, has already taken his first step towards toppling the Prime Minister. The MP for Makerfield, Josh Simons, announcing yesterday that he's going to stand down in order that Burnham has a chance at standing for his seat, a path back to Parliament. We've also had the Health Secretary, Wes Streeting, resigning from Cabinet. He has called on Starmer to facilitate a contest, and Starmer's former number 2, Angela Rayner, has said that she's been cleared of a tax probe and refused to rule out challenging the leader. Now, of all of them, Burnham is the man that Polymarket sees as having the highest chances replacing Starmer, but there are lots of hurdles in his way, Anna. First of all, he'd have to be approved by the National Executive Committee, even if Starmer doesn't stand in his way. Then he'd have to beat Reform at a by-election, and you can bet Reform will throw the kitchen sink at this, given Makerfield was the seat when they got their 6th highest vote share in 2024. On top of that, if Starmer can win the by-election and say, yes, I'm the man to fight Farage at the general, he'd have to get 81 Labour MPs to back him in the leadership contest. That'll be testing the patience of Labour MPs. And all of this will be testing the patience of the gilt market, the uncertainty that is about to unravel over the next few months.
Yeah, and that's the issue, isn't it, here, Lizzie? This is the next few months. Is UK policy effectively on pause here as we wait for Burnham to fight a by-election, and then we figure out how a Labour Party leadership challenge process unfolds? Like, how long are we in stasis for until we get some clarity on what is going to happen next?
Well, yeah, you hear it from officials in there, just the frustration that they're struggling to get on with government, with the distraction of this leadership contest brewing in the background. And for markets, it is a nightmare. Already you've seen gilts up sharply, yields up sharply at the open. Do need to put it into context of yesterday's drop in yields. The pound, as Anna says, down against both the dollar and the euro. It was already at a month low on cable. And all of this uncertainty only to hang over it, because the fear in markets is that you get somebody less fiscally prudent in there than Keir Starmer. That seems to be what you would get from Burnham, given his previous comments about not being in hock to the bond market. He's walked them back somewhat, but the market seemingly finding it difficult to forget.
Lizzie Burden. Thank you very much indeed in Downing Street for us, of course. Let's bring in a markets perspective now as well with Bloomberg M Live strategist Adam Linton. Adam, we're seeing yields up and bonds selling off again. To Lizzie's point, gilts in focus, of course, with energy, but also that political risk. How far does this go? Is this priced in now? Do we get to 6% at the back end of the gilt curve? What are you thinking about in terms of potential additional pressure on the gilt market, or whether or not things will settle down a bit?
Yeah, I mean, definitely yesterday when we spoke, there was an element of, why is cable still above 135? The moves in yields didn't look particularly disorderly. And I think at the time, that was there was a lot of uncertainty. We didn't know, is there going to be a leadership race? Who's going to be in it? What's their policy platform? And incrementally, we've got a little bit of further detail on that. We've now seen that Burnham has entered the fray. But, as Lizzie mentioned, there are a lot of hurdles to him be able to actually take position. And, we don't necessarily know exactly what his policy platform will be. So, yes, we've seen some increases in yields today. We've seen the pound down, but there's also bigger context. It's been an up week for global bond yields. We've seen hot inflation reports in the US and Japan. I mean, a relatively strong dollar environment. So if you look at, the moves, I'd say they're not actually that disorderly at the moment. And I think there is an element of, we still don't quite know exactly how this is going to play out. I mean, in conversations I've had on the desk is, well, is Andy Burnham actually going to be that left-leaning? I mean, he served as Gordon Brown. Yes, there's a comment about being hot to the bond market, but he's walked that back. So things may not actually be as bad as we were fearing at some stage. I mean, obviously, yes, things could potentially be rocky. He's going to have to win over the Labour grassroots, or any candidate is going to have to do that. So they may sound a bit more left-leaning. But for now, I'll say, if you look at the moves compared to other European benchmarks, they're not actually that extreme. So it could be more of a slow burn for UK assets.
Yes. So, and not as bad in the sense of yields going higher and borrowing costs going higher for the UK government. Bloomberg Economics diving into some of the things he said in the past about what his policy platform would be, cutting the basic rate of income tax, but putting it up at the top end and introducing some kind of wealth tax, also exempting defence spending from fiscal rules. I mean, we don't know. Who knows? We'll have to wait and see what he says. But it does that defence reference also takes me up. This is a world of rising yields, isn't it, at the moment? Because there are lots of governments around the world wrestling with how on earth you spend on these things, and you need to find the money from somewhere. How does this sit with the rising yield environment that we're seeing globally? Because there are other non-UK drivers.
Yeah, no, they're definitely, I mean, the big question at the moment is, isn't just a UK politics story. There's so much more going on in bond markets. We've seen that on display this week. And I think ultimately the real, release valve, if there is to be one for the market, is the Strait of Hormuz. And obviously, Trump's comments overnight, they're particularly concerning because the narrative we've been spinning is that markets, equity markets, they can keep going as long as there's progress towards a resolution, as long as there's no more kinetic action in the Middle East. That's obviously kind of been challenged, and we're kind of seeing that play out in the yield space. I mean, you've got 2 yields above 4, 10s above 4.5, and 30s above 5. I mean, is there a particular pain point for the US at which point, Trump does make some pivot? But ultimately, will any pivot be successful? There's so much uncertainty about how this is going to play out. Making those sort of fiscal, commitments, as you were saying, is incredibly difficult in this environment, which again could actually potentially be good news for those concerned about how left-leaning a potential future Labour government could be, as ultimately the hands could ultimately be tied anyways.
Nice to see you. Thanks for stopping by. Have a great weekend. Looking forward to the weekend. Adam Linton from our Bloomberg M Live team. Busy weekend coming up. There's a Cannes Film Festival. There's a Eurovision final, which I know Tom's watching.
Did you know Guy bought a karaoke set especially for this?
I'm dressing up.
I think he's booked his trip to Austria, and that's where he's dressing up, aren't you?
Guy Johnson and Lederhosen.
He'll be there in Vienna, waving the flag.
Yeah, looking forward to it. I'm maybe going to watch the golf.
Shall I give you some Hearts Celtic stats?
Yeah, this is amazing.
This is amazing. Okay,
yeah.
This is tomorrow. Hearts have won the Scottish League 4 times. The last time, 1959, 1960.
Yep.
Celtic have won it 55 times.
Yes.
And this is the final tomorrow.
Like Leicester winning, isn't it?
Yeah. It's going to be epic.
That one for our editor-in-chief.
Got to back Hearts.
Yes. It was a long time ago.
Yeah, that is it for the opening trade. The Pulse is coming up next. It's Friday, everybody. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
President Trump says his relationship with the Chinese president is very strong after a whirlwind trip to Beijing, but there are differences in their messaging on Iran. Gilts tumble. The pound heads for the worst week since 2024 as the UK heads for a drawn-out leadership battle. Plus, OpenAI says it may need to raise even more capital as it races to secure the compute power needed to meet surging demand for AI. So it's been quite a week. We have a lot of stories we need to get through. A lot of the focus, of course, will be on China, also inflation, and, of course, everything that's happening in the UK. Now, we've seen a little bit of a broad retreat, I guess, in bond markets, dragging stocks lower, putting a little bit of a halt to the artificial intelligence-fueled equity rally. I'm looking at the rate on the 10-year treasuries, continued its advance above 4.5%. The UK 10-year yield is above 5% as well. Sterling 133.65. And then we always look at Brent crude at the moment because of what's happening in the Strait of Hormuz, and you can see 107.73. Look, if you look at the markets map here in Europe, I think a lot of the focus has been in Asia with the summit between Presidents Xi and President Trump ending without any real eye-catching deals or a path to resume flows through the waterway, the Strait of Hormuz. And that's maybe also putting a little bit of a dampener. FTSE MIB down to 1.3%, as is the DAX. And then the FTSE here in the UK down 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, U.S. President Donald Trump is on his way back to the White House after a whirlwind trip to China for one of the most anticipated summits of the year. Well, President Trump had said he wanted to focus of the talks with Xi Jinping to be on trade, but few concrete deals were announced. Now, the leaders did discuss Iran, with China's foreign minister calling for the Strait of Hormuz to be reopened. In an interview, though, with Fox News, President Trump said the U.S. does not need the strait to be open at all.
We now produce more than if you combine Saudi Arabia and before the war, if you took Saudi Arabia, Russia, put them together, we're doing twice as much oil and gas as they are. Think of that. It's amazing.
Venezuela
you know what that was?
We're two.
Called drill, baby drill, right?
Oh, well, I mean, when you really think about it, if they have a problem with Iran, and they need the strait more than we need it open,
we don't need it at all.
We don't need it at all.
We don't need it at all.
Well, let's get straight to Minmin Lo, Bloomberg's China correspondent, who joins us now from Beijing. Minmin, so talk us through where the two leaders actually stand on the Iran war now.
Yeah, interestingly, if you look at the Chinese readout of what took place between Trump and Xi yesterday at the Great Hall of the People, the Strait of Hormuz and Iran did not appear in the Chinese readout at all. Of course, it got a lot more space in the U.S. version of the readout, with President Trump saying that China has agreed to play a bigger role in trying to bring about those peace negotiations, and that China is against the militarization of the Strait of Hormuz, that it's against the imposition of tolls in the area, and it doesn't agree that Iran should hold any nuclear weapons. We heard from the foreign ministry as well, saying that yes, they want to foster those dialogue, but again, it doesn't really offer anything new or specific in terms of what sort of leverage China is willing to use on Iran. The US also says that China is willing to buy more oil and gas from the US, but lack of specifics in terms of volumes. And again, we asked this question to the foreign ministry earlier this afternoon at a press briefing, and the spokesperson sidestepped the question, simply saying that restoring peace is the most urgent matter right now.
Minmin, President Trump also says some fantastic trade deals have been done. Well, the U.S. trade representative told Bloomberg that he expects China to spend billions on American agriculture. So let's listen.
Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years. And we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year. We want to focus on non-sensitive goods. We think we should be selling them, things we think we should be buying from them, trying to facilitate trade in that area. And then from there, we'll be able to interact with our Chinese colleagues and negotiate with them.
Minmin, has President Trump secured some wins around trade?
Well, again, the specifics are a little bit lacking. We know that the U.S. has said they want to speed up the clearance of Chinese investments into the U.S. This is one potential win for China, because China has been looking to pour more capital in the U.S., but there has been a lot of scrutiny from CFIUS, for example, that has scuppered a number of Chinese deals. So that's potentially on the docket, but lack of specifics there. In terms of actual deal where we have real numbers, Boeing came through with a 200 jets deal, but that was smaller than anticipated. It's been previously reported that Boeing was eyeing a 500 jet deal, so we saw the stock fall on the back of that. No forward progress on soybean, because that was already agreed upon in Busan, and China is on track to fulfilling those 25 million metric ton of soybeans. But beef as well, we mentioned this yesterday, China approving the licenses of hundreds of these beef plants in the US after allowing those licenses to lapse last year. And this is something that is quite crucial as well, although given the environment now with a sluggish consumption demand and Chinese meat producers also facing the issue of overcapacity, it remains to be seen what the actual trade volume is going to be. One major disappointment has been on the tech front, right? Because there's been so much anticipation about Jensen Huang being the latest addition to that delegation. And Jamieson Greer said that tech curbs didn't really feature very heavily in the discussion between President Trump and Xi. And he said that it's going to be up to Beijing to decide whether or not to buy those H200 chips. So it doesn't seem like the two sides discussed the rolling back of tech curbs. Reuters mentioned that NVIDIA has gotten clearance to sell to some 10 Chinese tech companies, but we haven't gotten official confirmation on that front. Rare earths as well, Jamieson Greer said that he would give a passing grade to China when it comes to that, so suggesting that there is some level of satisfaction about the recovery in shipments of rare earths.
Minmin, thank you so much. Minmin Lo there in Beijing. Now, President Trump's comments, of course, on the Strait of Hormuz and everything else that Minmin was also really explaining are fueling inflation concerns. Shaukat Bunglawala, EMEA head of multi-asset solutions at Goldman Sachs Asset Management, joins me now. Shaukat, we've made it through Friday. It's just been a big week, like the last couple of months have been, because you have AI pulling in one direction, you have inflation concerns, and then there's an added layer of geopolitics. What do you think is driving the markets right now?
Sure. So firstly, great to be on, Francine. Thanks for having me. So I think that firstly, it's worth noting that notwithstanding what's now roughly about 10-week closure of the Strait of Hormuz, global growth's actually held up pretty well. US growth is expected to come in at around 2% for the full year. We saw Q1 GDP at 2%. And in some ways, that's related to the overall effect of an oil price increase, which has been considerable, not actually weighing in on growth as much as was presumably forecasted originally. Some of that's to do with obviously the high levels of inventory that we went in with before this particular conflict. Some of it's related to some of the physical shortages, perhaps not being able to be substituted, jet fuels just being able to be dealt with by airlines cancelling low value routes, which we've seen, of course, in Europe. But you've also seen this extraordinary amount of AI capex that's continuing to fuel the boom and the fiscal policy tailwind as well. And that's resulted in global growth actually holding up reasonably well. But as you say, we are now seeing headline inflation pick up.
Yeah, do you worry about the US or Europe more?
Europe, certainly. I think the overall picture in terms of the US, because it's got a steady labour market, overall non-farm payrolls are actually still positive. They're above expectations. Jobless claims are still pretty benign, and therefore the US growth picture actually looks reasonable. Europe has got a bigger challenge. It's certainly more impacted by elevated energy prices. You've seen that with Eurozone PMIs coming down now below 50. German industrial production is surprised to the downside. And you're seeing headline inflation now through the flash estimates of around 3%. That's up from 2% at the beginning of the year. The UK similarly around 3.5%, and that introduces more of a policy dilemma.
Okay, but I mean, I was going to ask you about the policy dilemma because you could see quite a big divergence between what the Fed does and what the ECB. I mean, the ECB is caught between a rock and hard place, right? And they're saying it quite openly that they're not really sure what happens next.
That's fair. I think in the US you could expect to see the Fed just stay on hold. It's got the luxury of being able to wait, given it's got a steady labour market backdrop and a reasonably resilient growth picture. Europe doesn't have that. Europe's growth in the first quarter was about 0.1% quarter on quarter. It is impacted that bit more by an energy supply shock. You're seeing that through headline inflation. So the growth inflation mix in the UK introduces that dilemma. What we'd expect is that the ECB is going to have to increase rates. It may well expect that's going to have a downside impact on growth as well. So it may be a temporary increase, but they do have the benefit of starting from a low point. Right. Rates at 2%. It's got the ability to perhaps increase by a couple of 25 basis points hikes this year with a view of then easing next year. And that's what essentially the market's pricing.
So, Shaka, I mean, what's the danger then for the Bank of England that starts from much higher, right? Also given all of the volatility because of politics.
Yes, and the Bank of England certainly in a tough spot as well. The market's now priced in something like 3 hikes for the UK from its 3 3/4 rate. We think that's probably a little bit high, recognizing they are already in restrictive territory. It's certainly positive that the most recent prints on growth were above expectation. What we'd expect to see is the Bank of England stay on hold, wait to see more data come through, and then act accordingly. But the pricing of 3 hikes seems a little bit rich.
When you look at the Strait of Hormuz, I mean, this changes everything. It changes inflation dynamics, whether we have enough fuel for the summer. What's your base expectation? Like, as a strategist, do you have to change if the market changes, or do you just have a base case that it looks likely to get worse?
So our base case is that we're expecting constructive growth. That's one of the reasons, actually, we're still constructive on risk assets. Yeah. That does presuppose, of course, that the Strait of Hormuz does reopen.
Right.
Yes. To the extent that it doesn't, it could cause, of course, further inflation, further shifts in potential paths of policy rate, and an impact on economic growth. So the expectation of disinflationary trends re-emerging off the back end of essentially tariffs fading, this energy shock fading. We do have the benefit also of recognizing that wage inflation pressures are slowing. Shelter inflation should come down in the US as well. That should see the disinflationary trend re-emerge, and therefore the medium-term outlook is constructive. But it's worth bearing in mind that the baseline expectation of that is based on the Strait of Hormuz reopening reasonably soon.
What do you look at in AI?
So AI is interesting in the sense of course, the extraordinary contribution it's making to economic growth. In the US, we've now seen forecasts of $750 billion of spend. That's up 11% from the previous $660 billion. And it's, of course, much broader than just chips. It's this extraordinary industrial rollout with power infrastructure, with data centers, all of the energy that needs to support that huge level of electricity demand to sustain data centers. And that contributes around about 0.5% to GDP growth in the US. What's worth also bearing in mind with AI, though, beyond the AI capex, is the debate about margin pressure versus revenue growth. On the one side, you've got this huge level of capex that will result in expensive assets depreciating. So you have to see the level of revenue growth to justify that spend. Now, in the first quarter, we saw a continued acceleration of cloud revenue growth, which is positive, and that justifies some of that spend. And then secondly, you need to see a much wider adoption of AI. You're already seeing that, of course, play out, but that market is competitive as it relates to AI models. And whilst the path of monetization remains unclear, the clearest beneficiary of AI capex at the moment is semiconductors, and that's essentially what you're seeing play out in the market.
Yeah, that's been very clear this week. Thank you so much for joining us. Shaukat Bunglawala, EMEA, Head of Multi-Asset Solutions at Goldman Sachs Asset Management. Coming up, pressure on the UK Prime Minister, speculation about potential challengers for the UK's top job. Details next, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francie Lacqua here in London. Now, a potential challenger to the UK Prime Minister Keir Starmer's leadership has put pressure on UK gilts, but the contest is likely to be drawn out. Bloomberg opinion columnist Adrian Woolridge and Bloomberg's John Stepek are both here. So I couldn't wait, actually, to get you both on to try and talk about how British politics has changed. Now, you have some really funny pieces. I mean, funny depending on where you live. But, it's just completely, different system. And now there's a real contest race to replace the Prime Minister.
Absolutely. The Labour government came in to replace the chaos of the Tory years, and it's replaced it with the chaos of the Labour years. I mean, it's quite an extraordinary transformation. A government with a big majority, a lot of goodwill of the people behind it to sort things out, and it's produced chaos.
So, what I can't really 100% get to the bottom of it, I understand that Keir Starmer was a disappointment for many people, but is it a personality problem, or is it that people just want change?
I believe it's fundamentally a personality problem. I think that the British country is a centrist country. It wanted a centrist solution to its problems. It's elected a rather dull centrist politician to deliver them, and he failed to deliver. I don't think there's anything structural here. I think if you look at Canada, if you look at Australia, where you've got much better leaders, they are delivering on that agenda.
John, how long do you think, I mean, the Prime Minister is almost, is it impossible for him to survive at this point?
I mean, I think so. I mean, obviously you can never say never. This is the problem. But the thing is, we've now got, so Andy Burnham has now got a pathway to becoming the leader. Yeah. Now, you can't take it for granted he'll definitely get elected. You know, there was a strong showing for reform in the area where he's, you know, trying to get elected. At the local elections, equally, he's very popular. So, you know, chances are, you know, he wouldn't go for it if he didn't think he had a good chance. And once he gets there, it's very clear that he will ignite a leadership election. And at that point, it seems, again, reasonably clear, although, again, you know, I mean, Jeremy Corbyn got to power very unexpectedly in 2015. But it's likely that he'll get there. And then at that point, yeah, it's kind of, you know, Starmer's obviously toast. And even if he doesn't, it's like, well what does happen then? You know, because he's very much a lame duck. And one thing I would slightly take issue, I mean, I agree, I think there is a personality problem here, but also the party's very divided. So you know, there's a kind of Corbynite end of the party, a very hard left end who are much closer to the Greens in some ways. And then there's a kind of Blairite, and there's always been that civil war.
But this is what took down the Tory party.
Oh, absolutely,
right?
Yeah, they were divided too.
And there was not. So what's taking down markets? So gilts are actually, you know, tumbling because I guess they're worrying that the Manchester mayor, that's now, you know, looking like he'll secure some kind of potential challenge to Keir Starmer. You know, it's not only about political instability, it's actually what he'll do with money spent. So I spoke to him 10 days ago, and this is what he had to say about fiscal spending.
We need a 10-year approach to repairing public housing, transport, energy, crucially. That affects individual households, but businesses as well. The cost of energy in the UK is far too high. So a 10-year reform programme there. 10-year reform of the care and health system as well. That's what I think the UK needs, and I think it's better done on a collaborative basis, so that Britain is more of an investable proposition. You know, we need to get rid of the turbulence from our politics, because that then doesn't give the markets confidence to invest.
I mean, it was only 2 weeks ago. It really feels like a lifetime. John, I guess there's just concern that he might increase public spending and with a gilt issuance. But is the next prime minister going to do that anyway? No, you know, out of the three that we have contenders.
I mean, to be fair, I mean, Streeting is sort of seen as the one who's least likely to do that. But equally, he's the one, I think it's fair to say, is least likely to win amongst the people who'll be voting for him. And it's pretty clear that, I mean, the FT did a piece the other day where they talked to various gilts traders, and Andy Burnham was very clearly the one they were most concerned about. And yeah, it's been a turbulent night for bonds overall because of Iran, etc., inflation, but definitely gilts have going down a bit more than the peer group, and the pound obviously also kind of fell out of bed slightly whenever it heard that Burnham was going to have a crack at it. So clearly they are worried. And I mean, I mean, it's interesting. I mean, look at that piece, that you know, the interview. At no point did they actually mention gilts. At no point did they explain how he was going to fix any of this. And when he's talking about collaboration and all of these kinds of things, he's basically talking about the public sector doing more and the private sector doing less. And that's obviously a kind of a slightly
it's just
covered up
more
way
left,
of,
right? I mean, we did mention a little bit about public spending. What needs to happen, Adrian, now to have just a little bit more political stability? I mean, I thought naively that the fixed term parliament meant that there was going to be stability, and it seems anything but.
One problem is it's going to take quite a long time for this to play itself out, and that means a lot of uncertainty for the markets, because Burnham has to win a by-election, and then when he gets into Parliament, he has to go through the whole leadership process, selection process. So it's not going to be resolved very rapidly. But I would counsel against the idea that the bond markets might have that Burnham is a wild man of the left. He made this very foolish comment about not being in hock to the bond markets, but he's a fairly sensible, pragmatic leftist. His mayorship of Manchester has been characterized by slow, pragmatic problem solving, much of it very popular, particularly with taking the buses into national not national, into regional control, local control. He's a pragmatic politician, and one of the arguments presented against him by his own side is that he's a shapeshifter. He started out as a fairly loyal Blairite. He's cut his cloth according to his sail according to the wind. And that's actually not a bad thing to have in politics. I wouldn't, he's not going to crash the markets or anything like that.
Adrian, I mean, you had a wonderful book actually looking at, what's been happening in politics around the world, and actually how you get back to that center that you were talking about. But is there a blueprint for, I guess politics is ruptured across Europe, here in the UK, very much so. How do you bring the two together?
I think there is a sort of blueprint, a sort of centrist blueprint. We've seen it in Australia. We've seen it in Canada. More energy production, more control of immigration, but also mix that with a pro-business sort of policies and the focus on bringing sort of order to the streets. I noticed that the mayor of San Francisco used to be a complete disaster, a complete mess. The new mayor of San Francisco has been sorting out the drug markets, closing the drug markets, dealing with the tent cities, getting some order into government. And his popularity rating is about 74%, I think, in the latest poll. So there is an agenda for a pragmatic problem-solving left with a little bit more public spending, but more focus on just making the lives of regular people better. And I think the fact that Burnham has been the mayor of Manchester, running a city, and actually doing the running, I think, rather than Boris Johnson, who sort of presided over the running of a city, actually bodes well. A lot of the problems that really upset people aren't anything to do with the bond market. They're to do with the fact there's litter strewn all over the place.
What does that, I mean, how do you explain reform, has been doing well, but also in the polls, it's quite incredible from, where it was to where it's now. How do you explain that?
I mean, I think it's pretty simple. I think that, people have consistently voted for politicians who will tackle things and make them feel secure. Immigration is a massive issue in people's minds. And it's something that I think people in our position are often slightly squeamish about talking about, but that's something that people are worried about, and it's obviously the reason that reform are leading. Now, on the one hand, the good news for any incumbents is that immigration is falling, but that's because it went so high post-COVID. And I would be surprised if it doesn't continue to be an issue. So this idea of making people feel safer, and I think I absolutely agree with Adrian on cleaning up litter, taking a sense of control over one's borders would definitely help, and it would take some of the steam out of reform. Whether or not the current party can do that or do it convincingly is another matter. Because I think you're right about Burnham. My main question is, will he be able to corral the kind of left of the party tightly enough to make sure that they do cooperate? Because that has been the thing that, the rebellion in 2025 is what did for Starmer ultimately.
Totally.
Adrian, so you've published also this book, which is a great read called, Centrists of the World Unite. I mean, is this really a test case of the future of not only the UK, but of politics in Europe?
Oh, I think it is very much a test case for that, because the Labour Party still has a big majority. And will continue to have a big majority till the next election. So it's the last chance that they really have to assert an agenda. And as I said, the problem with Starmer was that he didn't really lead the party. He just shifted from one thing to another. I don't think it was a problem with a centrist agenda. I don't think there's a great desire for a reform party agenda in this country, or for a Green Party agenda. I think there's a desire for somebody who can, clean up the mess and do things. And Starmer did it. However, if the rest of this Labour government is absorbed by internecine fighting, and if whoever succeeds Starmer doesn't get a grip on the party, then we will definitely go to a more radical direction.
Thank you both for joining us. Bloomberg opinion columnist Adrian Woolridge